pulling up a recording. That took me a little bit longer to get to the right YouTube. I'm sorry about that. But Miss Cordelia is here. So we know she's here and she got that prayer.
Yes, absolutely. Even Barbara, thank you very much.
Good morning. You're always the first person I think about all the time when I think about those prayers. So
Thank you. Barbara is a blessing and an angel. She's got the power from the one above, and her prayers always touch me all the time. So I appreciate that.
Well,
amen.
thank you so much.
Well, thank you both, ladies. Okay, so anybody brand new, I know there's fluctuation, a lot of joining, rejoining, all the etc. so forth. Anybody brand new, never come and hung out with us before, no experience in working with me or these classes or this at all, please do put it in the chat. If that's you, and you're shy, first off, don't be shy. You'll get way more out of these calls if you unmute yourself, if you are able to come forward and talk a little bit, because that's, we learn together. I mean, we all have different learning styles, but at the end of the day, it's still going to take participation, right? No matter which style is yours, participation is still the only method. I mean, to be a little bit bold in that statement, but it is the only method that's going to get you from where you're at to where you want to be. So participating in however you best works for you. Couple of things. Favorite president. I figured that would be a cool discussion. So if you guys want, we can open up lines to talk about your favorite president. I spent the weekend in Washington, D.C., managed to see a few of the monuments, not nearly as much as I wanted. That city is spread out, and it is not as easy to just pop from one place to another just from traffic alone. It's crazy. I literally think it's worse traffic than New York City. I'm sure somebody's going to correct me there, but that's my humble opinion. It's crazy. So, needless to say, great discussion. Yesterday was President's Day. Thank you, Miss Barbara, for putting that in the chat. Second topic, I really want to make sure we're not missing. We're coming in the end of February. Everyone is getting the alerts. I'm sure that Bitcoin is at 25,000. If any of you have crypto wallets, I'm sure you know the majority of them are now loaning against your crypto. I don't know what that's about, but to me, that devalues the potential crypto, the potential value. Let me use that word properly. Needless to say, if you're trying to withdraw or move any money, they'll stop you and say, hey, look, if you don't want to do that, we'll loan you the money, up to $1 million, I think is what Coinbase said, but that's kind of crazy. I think that's a recipe. So anybody who wants to have any, discussion on that, I think it's definitely worth it. Otherwise, cryptos are moving. We've talked about ICP, which is up a lot from where we originally talked about it. Like you guys know, I have an auto deposit into that particular crypto, as well as a couple of others, but that's the one I'm most heavily in. My last topic for the month, well, I guess, or at the end of the month, is what do you need? What area do you want covered the most? And please think on that. There are 30 people on this call, and I know 30 people who would love to be 6 and 7 figure income earners. And maybe it's not even the 6 figures, it's just the financial freedom. Maybe it's not even, maybe you're developed enough to know that it's not about a certain amount every day or every week or every month. It's just about an ability to trust in your skill set. If that's you and you're just looking to buy back your time, even, or the right to make your own choices that don't necessarily go off of your boss, right? Oh, that's where that quote comes in. I promise we'll get to the church. I promise. But I literally took a note of this in my phone because I could not take a note of this in my phone. It was that crazy. But what did they say? Women King. Many never thought it possible, and this is paraphrased. So if y'all haven't seen the movie, or if you have and you're going to correct me, it's paraphrased. You have been forewarned. But what does it say? It says, many never thought it possible, but we believed. And that's what makes a great leader, right? Is seeing what others do not see. The world has gotten very good at proving that if you want to hold a people in chains, you first have to convince them that they're meant to be bound. That's the line. That's the line that I just think applies across cultures, races, centuries, millenniums, money, and every single thing else. If we look back in history, the way we live now, and especially in America, and I'm sure other countries too, where we work all the time, that was not how it was hundreds of years ago for any culture. But now we're convinced that we're supposed to work and work and work, and it's normal to pay taxes, it's normal to be in debt, it's normal to work 12 hours, and it's normal to do this and to have no time and no peace, and we're so convinced of that. But sorry, back to that sentence. Or was I? What if you want to hold a people in chains, you must first convince them that they are meant to be bound. Oh my gosh, huge. And of course, if we join them in becoming our own oppressor, and that's, I think, what we've done even financially. So that's the line that got me all like, whoa, like I literally paused it 500 times just to take a note of it, because wow, what a powerful statement. So with that said, if you don't want to continue to stay in the position you're in and you just are looking for that little bit of freedom, I need to know what one areas you want covered most. And when I ask that question, I mean, if you say, hey, I think I'm good on the entries, let's check your entries. Like, I have no problem doing that. It's a humbling experience, even for myself, when I hold myself accountable. If you say, hey, I really want to talk about management, I'm 1,000% in on that. If you want to say, hey, I wanted to go deeper on the math of figuring out lot sizes, I'd say, hey, cool. But we have a lot of the tools you need to be able to accomplish those goals. Yes, some of them are cooltradingtools.com. That's the ATM, right? And a lot of the tools that we have also help you with lot sizes. So a lot of the problems you're going to run into are figured out. So what can we help you figure out? Of course, Uncle P had some ideas of how to best put some more lessons into the classes and whatnot. So we're going to try to apply some of those as well. But if you have things particularly, you got to tell me. And then, of course, the rest of this was what we're hoping to go a little bit more into for January. And I'm going to keep it here because I think it's still relevant. So if you're brand new, sorry for that whole moment, but that quote had me goosebumps. And oh my goodness, I was like completely fired up, giggling, teary eyed, kind of, whoa, huge. So if you're brand new, this is all pretty simple. Be respectful of the group. You know, people have put their time, effort, energy, money, years into building these companies. And they might be small, they might be like 500 people. They might be trying to grow into millions of people. They might be trying to be at university status and all kinds of different things. But this is their playground. And that includes when I have my own company. That's my little section of my little playground that I have invested so much money, like more money than I've, it's ridiculous to think about. But please be respectful of that. All that means is don't cross recruit. All that means is be kind. If the room is not for you, cool. Like, we can't possibly walk into every room in the universe and feel like, wow, I belong here. That's totally okay. But just be a good human being. All pretty simple. Please use your real names on Zoom and Telegram. All the stuff you guys have already heard before. Blah blah blah. So energy, get up, walk around. This seems simple, but if your energy is off and you're making decisions from a poor perception place, right? Any of you guys who've ever shot a gun or had an eye test, you know how you hold your thumb out in front of you and you're aiming, right? But you close one eye and close the other eye and the thumb adjusts. Well, I had this in-depth conversation with my oldest son this weekend about that, because when we're making decisions based off of our perception, and our perception is off, right? Maybe our perception is aiming a little bit to the right because we're, right eye dominant or whatever, however that works for your eyes. It's really crazy to see that you keep adjusting your trading plan, adjusting your ITM setting, adjusting your life to the wrong target because your perception is off. And I know that's kind of a really deep conversation, but that goes into this energy thing. We have to make sure that our minds, our emotions, our bodies are in a decent place if you want to have success at this or really anything else long term. Yes, you can trip. You can accidentally fall on $300,000. It's very possible in this industry, but to consistently be able to make money and not be the come and go, to consistently be able to have a skill set that you can depend on and plan your life around, that's going to take working on your energy. And it starts with your perception. And so that's my TED talk for the morning. Order of operations, this is all pretty simple. Take a screenshot if you're brand new, looking for a couple of winning trades. Indicators, this is what we're using. Anything that's available in the group is in the group. It's in the Telegram and or will be on a website. Anything that's available that I promote and I support, which is mostly just Cool Trading Tools and Super EZ, right? Cool Trading Tools is a manager. That's the ATM. Of course, Super EZ is a, I don't know, how do I say that? Reversal based system. It's a reversal based, signal based system, I guess is how I would define it. Both great, situations, if you will. If you don't have them, please go take a look. $1 million $1 million today or a single penny. I can't dump this just because I'm married to it. We can of course put another little trading plan next to this, but the more you see this and the more you realize that's all we're doing on a different scale, sure. But again, I've talked about this before for all of y'all who have been around a long time. I never, and it's not in confidence, it's just practicality. It's being, the kind of girl with my head in the clouds but my feet on the ground. I never saw this. I just saw stuff like this and said, hey, if I mess this up by 90%, 50%, I'm still doing better than I am in corporate America. If I fail at this compounding concept by 50%, 90%, I'm still technically earning more than I would if I bought into a franchise. If I mess this up, I'm still doing better than the S&P is and all the stinking Instagram accounts that say, hey, you want to be a billionaire? Just put money in S&P for the next 40 years. You're still doing better than that. So when you take this whole big basket and you say, wait a minute, this is possible. And I'm not even talking this. I'm just talking even in this range. From a penny, now put $1,000 here. Holy cow, it's completely crazy. Crazy. So that's that. The original How to Compound Six and Seven Figures, if you've never seen it, take a picture. And of course, I rewrote this mostly just because I wanted to be a little bit more in depth. No, we did not go into you must have 3%, risk to reward. You must have X% accuracy. Because at the end of the day, as you plug and play your actuality, your reality, you'll be able to figure out you can technically make money with 10% accuracy. Is it probable, in my opinion? Because just the sway of the markets and the fees? Absolutely not. Highly unlikely, in my opinion, for the majority of people. But some people do it. It is mathematically possible. Can you technically lose money with a 90% accuracy? Again, to me, not super probable if you're, having reasonable lot sizes, but it's definitely possible. So when you take that extreme, the extreme on the left and the extreme on the right, we realize that there isn't a certain number of percentage of risk, percentage of accuracy that you need to go for. It's the basket of information you need to plug and play that's closest to what you're actually doing. So we can help calculate for you on your behalf. So that's that. ATM management settings, these are the stop loss that we're using in class. So is it far? Yes. Do we win? Yes. Is that a lot of pips to contend with? Yes, it is. I get it. But how can you take this same concept? Well, you can tighten the stop loss. You're going to get knocked out more, which means you have to be present to get in more. Otherwise, you will end up being one of those people who don't win with an 80, 90% accuracy. But otherwise, honest to God, when you find a good analysis and you have a really good approach to your analysis and you're managing off the 1 hour time frame, giving it a little bit of room, you can trade twice a week and make an insane amount of money. I mean, I'm talking 30 minutes twice a week, complete time and financial freedom. And the ATM, of course, is a great help for that. I'm going to say again, most of the middle pieces, for those of y'all who are brand new, they kind of come out in the wash. I wish they were more statistically significant, but they're not. And I have to acknowledge that the more you scale out, the less your overall, gain on risk is going to be. Now, I'm not letting this go because of my personality and how I want to trade. It just makes me feel safe and secure. It makes me feel warm and fuzzy when my trades to know that I've scaled out of a position. It takes away some of that stress factor of, oh my gosh, I was right, but I lost. So this makes me happy. This might not make you happy. And there's math to back it up to say you might be better off just trailing it real tight and getting the most out of it. So just so you know, the world is your oyster. Make your own decisions. Stop loss is there. And then, of course, we mark up our take profits. So a little bit longer on that this morning. I'm sorry, but we were in a moment. All right, now that I've done that, I'm going to pop to our trade report just for a second. Today is Tuesday, the 21st, if I'm not mistaken. Technically, we hit a couple more take profits on a few of those. The only one I've really marked down is NAS. I think that's the only one I'm going to track. But yesterday was not a perfect week. I know I hate it when I'm this honest, but I love the fact that we can be real. When you have a couple of really good weeks, you can anticipate there's probably going to be a loss somewhere. It's just the axiom of trading. So don't freak out. Let it happen, right? Let it go. We have great weeks. This was probably one of the worst weeks we had, but you have this good period, and then the law of averages comes up to get you. Look at that huge period, right? I think had 4 or 5 weeks of no losses, a perfect month. We've never done that before. And then it comes out in the wash. It always does. So don't freak out when you get a loss. Don't freak out when that's coming, because it's probably coming. Can't be any more real than that, but another great week. Now let's go analyze those trades. I'm going to stop that share. Okay. Today's Tuesday. I didn't want to spend a whole bunch of time on TradingView on Tuesdays, mostly because Tuesdays, we usually have the most trade analysis to review, but I'm going to pop through this just really quickly. It's not a whole bunch of discussion, but at least enough to show you real quick. Gold, we were waiting for this. So this is on the 16th. We're still waiting. We came down into range, did not touch our next level, but now we've got a nice head and shoulder. So if you're not anywhere near this and you get there before I do, I would definitely be considering a potential buy. We'll go mark up how, where, and when, and how much in a minute, but I would be remiss if I did not mention. So I make my line on the candle prior before the candle we're on. We did not get it. We pulled down one more level. Cool, no problem. We know what to do. We know how to track this. So we're looking to come up into this range. We know what that target is. See, pull this up. Hey, Crypto Sissy. Sorry, mute all. There you go. Sorry about that. But head and shoulders pattern, we'll go talk a little bit more. We have a lot more reasons just in just one thing to be looking for this to potentially buy up. Great overall potential on this trade. Let's at least mark, if I can, maybe if I can find it. I'm gonna put this here. Figure your target is at least into here, and we're gonna measure that measured move too. You can choose to have your stop loss below the most recent actual low plus some room. You can also choose here. Now, obviously, this is going to be a lot more sexy in terms of risk to reward, but it doesn't make it better. It doesn't make it more accurate. So you have to decide if you can handle losing a bigger amount more often, or if you can handle losing more often a smaller amount. That's going to depend greatly on your psychology. Me, I can take one big blow very rarely, a lot better than I can the trickling, nagging sensation of wrong, loss. That weighs on me. That wears and tears on my energy, my confidence of what I'm doing. So for me, I choose to have a bigger, tighter, looser stop loss. Doesn't mean that's going to work for you, and it doesn't mean you have to do the same thing. But what does that look like? So you figure measured move at minimum is still going to put you somewhere in between about target 2 and target 3. So we've already got 1, 2. This is where we're looking to go. It's all the way up into this range. Here's the body of that candle, the bullish candle prior to the bearish impulse move to the downside. This is super faint, so we could actually see stuff. I'm gonna make it a little bit more apparent, visual. There we go. So now we can actually see it. Not a bad way to be. And look though, if you pull this all the way down into this range, there's the wick zone, and you move it out of the way to figure in 1 ATR kind of cushion. That's not exact, it's just trading view. We're not measuring it pip by pip. Even only into this range is still almost a 2 to 1. And that's giving it plenty of room. So you get to decide for you. You can go here or you can go here. But that's totally up to you. If we break this high, we're going to look for the retest, and we're going to be looking to buy it all the way up into the zone that we already marked up. So real simple, kind of excited about this trade personally, this and UK 100. But since we only have so much time, we're going to just bounce through a couple of things. So that's gold. I did not want to miss that discussion just because I think it's special and important. US 30, here's where we're at. Can we sell here? I mean, even if we put our stop loss here at the most recent swing high, that's a pretty big ask. So for today, do I still think that we have more room to the downside? I absolutely do. I totally 100% do. 100%. We caught this baby buy up. We knew the overall direction was down. We caught this buy on this day. We bought it up perfectly. Wonderful experience. Wonderful amount of pips. Easy trade overall. We got the sell on Tuesday. We got the buy on Thursday. Here's where we're sitting. We're at a level. I'm not going to say it's the most significant level because I don't think it is. Now notice we're over here at this little liquidity void. A little bit higher than where I'd want to be. Back to candles. But still within this range, right? I wouldn't mind taking a baby scalp, kind of like what we did here. But either way, I need a tighter stop loss before I'm going to try to sell here. Do I, again, think that this has more room to sell? I definitely do. My overall direction on this trade is still a sell, but I cannot possibly take a sell where the market is sitting right now. So if you're in this and you're holding, good on you. I would say keep holding. Keep doing you, period, across the board. But for me, unfortunately, I'm going to have to just scalp into a little bounce. If we come up and retest a trend line even, I would consider that. There's quite a few options. Look at how many peaks we have here. That's going to make a really nice trend line, if you will. Beautiful, but I can't possibly sell here. My stop loss would be too big. My risk and reward, even best case scenario, is just too much to ask for. So if I enter here, my stop loss is here plus some room. And my very, very, very likely to turn on target is here. I'm not even at a 1-to-1. So for that reason, I'm out on this sell. Sorry, if you're in it, you by all means go get it. But for today, I'm probably just gonna be looking for little baby scalps counter trend narrative. Let's see. Ironically, as we talk about cryptos, this is not moving very much. It's not going anywhere. Again, it's just, it looks really pretty on the daily, right? It looks super ready on the daily. Here's where we're at. Let me see if I can't try and get that off the way. This is a pretty sizable doji, and it still is a doji. So a lot of big wicks both direction, and we're sitting in a bearish candle as we speak on the daily time frame. So overall, am I still looking for this to buy? I am. My advice would be, if you're day trading this, go to a smaller time frame, wait for an entry, and then look for your buy. If you're trying to invest into this, same kind of concepts. You can use anything from Ichimoku to the golden strategy, and just go to the 15-minute time frame. When you get your reason to enter, so think 15-minute trade idea at an area of interest. So notice I said two things, not one. 15-minute trade idea, 30-minute trade idea, probably wouldn't go to 5. But that's number one. And number two, you only want to be paying attention to that if that's occurring at an area of interest on like the daily or the 4-hour. If that happens and you are scaling into these cryptocurrencies to buy and hold long term, that would be a good position to buy at a discount, right? Buy on sale, if you will. And of course, you can do the same thing with Ichimoku or uh, other methods and strategies. So that's Ripple. That is what I'm still looking for. We're just chilling and waiting. We have
Hey, excuse me, Jen.
come on out.
Hey, yeah, I just wanted to know, because I haven't been on here in a while. I wanted to just know about as far as the lot sizes go. Um, like what should I be looking for, like starting out with like maybe a $2,000 account?
So when we get over at MT4, after we look over some analysis, can we talk about that then? Because
Okay.
when I first started in IML, of course, they said stuff like 0.01 for every, $100 if the high risk people said that. The lower risk people would say stuff like 0.01 for every 1,000. And while I'm not knocking that, I think because people all have to learn in stages, we can't just vomit every piece of, information on you right now. You wouldn't retain anything. And it would be painful to witness. So I don't think it's
Yeah.
horrible advice, but I don't think it's accurate advice, right? So we'll go over more the mathematical approach and the more let's look at risk to reward and why you would be picking that lot size and why I can't even tell you 0.01 because the question would be on Ripple or on US 30 or on gold or on GU. Those would all four be different lot sizes on a $2,000 account. They would not be the same.
Yeah, that's what I need to learn. Yeah, because I know the difference like between forex pairs, but with the indices, I don't know how to calculate them as well.
Well, oh, that's a great question. Definitely we'll go over that when we get to the chart. Just it's going to be different. So first off, the different pairs is different, but also how far away your stop loss is. So if your stop loss is super tight, yes, you can afford a bigger lot size even on US 30. If your stop loss is looser and you're going off of something like structure, you can, you maybe you can, but likely you can't afford even the stop loss on that on US 30. So there's multiple variables that it's important that we know. I know we have to start where we are with what, 0.01 for every 1,000. Cool. We have to start with the levels of knowledge we're ready for, but that is a really bad way to consistently and accurately compound or grow your account. So we will go over that when we get to the charts though. Great
Okay.
question. GU real quick. We were waiting for this to buy up. We didn't mark it up in this is the 4-hour time frame. So I think last week wasn't quite ready yet. We did not even barely came into this little zone that we had marked up. Remember, we marked this up. We knew this was an area of interest back in January, so the end of January. And that's how long it took us to come respect this area. These analysis, I know they're getting messier and messier the longer we leave them, but they're so significant. If I can find a way to get them to you and just help you see them. Doesn't mean they're always going to play out, they're not. But if they're playing out 80-90% of the time, you have gold in your fingers. Like you have literally gold, access to everything you can imagine right here and right here alone. So Needless to say, beautiful impulse up. I would wait for a bit of a retracement and I would be buying this up to our next levels. So we'll go analyze this here in a second. The margin compound sheet is a good tool for that too. Very good tool for that. Yes, that's a great tool. NAS, here we are. Gosh, this is messy, but I love it. Love it. Let's go this over. We have bought. We knew we were looking for this to sell down. Not once, but twice. Not once, but twice. So I'm going to zoom in. Beautiful move to the downside. Nice impulse back up. Another beautiful move. We've got a triple top going on. We have yet, and I don't want to race this because I think that the longer we can hold on to this, I'm sorry it's messy, but I want you guys to see that if you follow through with this and you learn this analysis skill set, you can do all things. All the things, you can do them all. So I'm trying to stick to my guns and hold on to these stinking things. Wish me luck because it's so hard. It's so hard. Here's where we're at. We're at a nice little zone that we had marked up previously. So we knew this was an area, a significant area. This was our previous high. We're still failing to come and break lower lows. So we're still, no matter how you look at it, in an uptrend, right? But same concept. Would I be willing to buy a bounce? I would, but I mean, selling here is better than selling on US 30. It has got a lot more, a little bit better structure that we can go off of. It's not way up high as like US 30 is. So we can at least accomplish a decent risk to reward, but still my risk reward is not going to be great. So to a line chart, just to kind of simplify, I know this is messy. I'm sorry that I'm making you guys dizzy. Here's where we're at. Look at where volume of price is. We've officially broke this low. So the volume of the price, not the wicks, right? Look how much further we are currently. Now, secondly, look at where we're sitting. We're sitting in an area of interest. Here's the peak on the line chart, which is, this is the body, right? We're sitting at a very area of interest, a great one. So I am looking to break below. So we knew we were going to get some kind of reaction. This was marked up from a hot minute ago, and then I'm looking to sell again. So how we take this and how we analyze this, it's still going to be up to you. It depends on your account size, your capacity to manage, whether or not you have automatic management and everything in between. There's a lot that goes into this, but I'm 100% in on taking a baby scalp if one sets up for the buy. Otherwise, my overall huge time frame analysis still says that NAS has more room on the heavier top side, long term. Short term, I'm looking to sell this down. So let's see if I can't confuse you any more than I already have. How am I doing, guys? Great job. Great job at confusing you. I try, I promise. Okay, daily. I know it's messy, sorry. Here's the candle on the hour chart prior to the candle that we're on, but I went to the 4 hour just so we can see. If this is where we're at, we know we've got a little bit more room to push down. We'll be expecting a retracement and we'll be looking to sell down. Now here's the beauty of this, and this is why I'm so adamant about not racing. I'm going to keep these up just so you can see and take a screenshot how these levels are respected. And yes, sometimes they're broken through. Sometimes they don't prove to continue to be valuable or necessary or accurate. But when you see how easy this is and how respected these zones are in 3 months, 4 months later, you're going to think, wow, this zone does matter. This is something I can use. And it's really a beautiful thing. So overall, yes, here's where we're at. And because we already have our nice little arrows, I don't even need to go remake them because we already have some. We know we want the little buy up, which is, well, bear with me. This is not going to be pretty. But then we're coming into this range as my first target. Okay. If we break this range, same kind of concept, we'll be looking for the retest and then the continuation down to break this low. Do you think we're going to get that much of a sell down? I don't, but this next target, very likely. So we're just looking for one more corrective wave pattern. So we've got a nice move to the downside, a little bit of a pullback, one more corrective wave, and to see now if we're turning back up for the long-term buy or if we're going to come down and hit some more levels. So this is a beautiful, oh, I can't believe I'm going to do it. I'm going to do it. Here we go. Beautiful trade. So here's our high. I'm going to go up above that. And here's where we're at. So looking into this range, you're still closer 2 to 1. Is this perfect? No. Should you wait for a bit of a pullback? I would, personally. I would like that a little bit better. But that's giving it plenty of room. High probability trade. Easy. Really beautiful, amazing way to be. So yes, we already got this buy down. We know we've got plenty of sell down, sorry. And if you keep looking, this is we knew where these levels were prior to ever coming up to these levels, these pink magenta levels we have. We knew where our buy was long before this ever happened. We knew we were selling down. It's amazing to see what we can do here. So we already caught these pips, but now we're going to be looking at these pips. Yes, I'm going to take the buy, and that's all I've got on TradingView, so I can hurry up and get over these charts now. So stop share. I get a little bit geeked out on that. Just a tiny bit. Not like too much, but just a tiny bit. Holy moly. It's going to be a mess. Here we go.
You forgot about about German 30.
Oh, I did not. I haven't actually been marking German 30 up on there. I wouldn't mind, but I haven't. I don't believe I have on there. So yes, German 30 is something we could definitely take a look at. First things first, let's look at our trades, our Tuesday and Thursday trades. So here's Tuesday. I am incredibly impressed with a lot of what we're doing, guys. So much of what we're doing. Yes, we've got our day markers up just to kind of show you. I'm going to bounce through our Tuesday template. Nothing for NAS. US 30, this is where we were at. We caught a couple of take profits. We pulled back up, never coming to break our higher high. Of course, we came back into those same take profits, pulled back up, never made a higher high, came all the way down into range. We rejected off that little fancy blue box, this major target area I've been drawing up. Once, came into it, bounced through out of it, broke through it, came back, and now here's where we're sitting. So lovely, beautiful trade. This one actually has more pips than we have accounted for on our spreadsheet. I say this often. It's so easy to be the naysayer, but that naysayer, there we go. That naysayer works on both sides. So we've only got a couple of these pips accounted for. We did not account for all of them, and this is a lot, just to give you guys an idea. Is it easy to stay in or to get back in? No, but you're looking at 4,000 or 5,000 pips, one trade, no stress, easy. And if you want the whole truth, you could get in 1, 2. If you are really skilled, you could take a little scalp here, 3, 4, 5. You've got 5, 6 different entries, even on the bigger time frame. Odds are you have 10, 20, 25 even on the 5 and 15. If you're actually following this, which would make this a 100,000 pip trade, to give you an idea on the 5 minute. It's crazy to think about. It's absolute insanity, but you have this kind of access. So beautiful trade. I'm going to remove it from our drawing board. Done. German 30. Here's where we're at. This one was not as good, obviously. Here's where we were. We came in, so we got the high because we were on a baby time frame. So this is where we entered. We caught a couple of take profits beautifully. We knew we had a baby first target. We kind of wicked off of this, the major target. This is where I was. My baby target, my major target. If we ended up breaking below, we knew we'd be pushing down, but we have yet to do that. So sure, we scalped into this and we made another high. So we got some pips out of it. Not a bad way to be for German 30. I definitely think we've got some more room. Again, we didn't even count all these. I think we only counted 700. But needless to say, beautiful trade, right? Easy trade. And this one's not even a perfect one. We caught it at a great time, which is what made it a better trade. Had we tried to catch it down here, not so good, right? Not so good at all. But overall, good. Nice move down. We're still respecting this level and we're pushing back up. So I'm curious to see how this one plays out. So we're taking that off our drawing board. I will remove those as I get to the Thursday template. UK nothing here. And then Jonathan, one of my favorite humans, asked about this pair. So I'm going to go all the way up to the 4 hour. It's amazing what we can do when we actually try. When we shut off our mind, shut off the distractions, shut off all the other thought processes, which it's not easy. Here's where we're at. We knew we wanted a retracement into this area. Is it always perfect? Absolutely stinkingly not. It's not. Now what happened from this, and I know it's kind of zoomed in. Let's zoom out a little bit. Did we push up a tiny bit, just enough to kind of smidge into this next, candle and wick higher? We did. But what happened? It took a long time to come into this area, right? But we knew that these areas were where we were looking to come into. So from where we were looking, we would have hit take profit 1 and 2, and the major zone. And we knew that anywhere in this zone, we'd be looking for this to take off. We marked this up. Did it happen in this perfect 90-degree, super drop speed? No, it's more like this long, slow burn. And then now we're moving, but we knew what was happening with this pair. So for those of you guys who caught this or tracked this analysis, it's amazing what you're capable of when you're a little bit more patient. And it's hard not to second guess yourself. You got a lot of counter narratives in your ears. A lot of, well, consider this. It's hard to come to this and say, wait, can I listen to this put in my demo, not listen to anything else just for a minute, just to try, right? Just to see what happens, because this is beautiful. Not even a trade here, but I'm a little happy about it, so I had to stick with it.
Yeah, that's a good point that you brought up too, Jenny. That with your the patience and allowing the time for the trade to pan out the way it's supposed to pan out, because the markets at the end of the day don't care about our personal situation, how fast we want our bank account to be piled up. The market's going to move when it's ready to move. Even for example, for this trade, I caught a little bit on that down. Was staying with our markup that we had, and then eventually I ended up taking trades on some other pairs because just normally I do not trade forex as much, so my patience value sort of went off with the pair, and I didn't follow it, so I definitely missed out on the move up to the upside, but I did move to some of the other pairs, and it worked out that way. But knowing what you're trading, what instrument you're trading, and letting that pan out is definitely a good point.
Thank you, Jonathan. Look, that took what? We analyzed that on Tuesday. Today is Tuesday. It's 7 days later. That's a long time. 7 days, you guys. And thank you, Jonathan. That's a great point. That's a good point to bring up. And the lot sizes, the two things. Real quick, let's talk about this. NAS 100. So this was heavily discussed. We knew this was not the best entry, but this had less risk than US 30 to try to sell. So I was willing to take the drawdown, unlike I was on US 30. I was not willing to take that drawdown, period, across the board. Needless to say, we went into drawdown and came perfectly to the level that we were looking for. So here we go. That's 1,200 pips. Not an easy feat to be, right? Not an easy position to be in. I get it. I 1,000% get it. We also talked heavily, and remember, this blue line was drawn before this pulled up, so we knew, give or take, about how much we were going to pull back. My areas were up here, all the way into here. We had the what did he call it? The fair market value was in this area, give or take. We pushed well below above that. We made a nice little doji, a couple of them to prove, hey, now it's time. And if you had more patience or were around and weren't looking for the swing trade, you could have got your entry up here, which makes this a really nice trade. 4,000 or 5,000 pips, give or take. 4,000. My bad. We still just managing it the way that we're talking about. There's nothing withheld from you guys. That's still 3,000 pips. So did you go into drawdown? Yes. Does that pain? Yes. Do you need to have the right lot size that allows you to manage according to where your stop loss is? Yes. But still, overall, great trade. I'm still happy with this analysis. I still wouldn't change. So like that's how you know when you're on a better track, right? Is when you go and review your previous decisions. And that's something I try to hold myself accountable for, is if I went and reviewed last week, would I have changed any of the decisions I made based off of what I saw at the time, right? Because hindsight's always 2020, and we're always beating ourselves up and say, if I knew what I knew now, and now that we've seen how the market played out, I would have done X, Y, and Z. We always do that. We do it in our relationships, we do it in our lives, we do it in trading. But I really think that's a good situation for you guys to do, even yourselves, is to go back and say, would I have made the same decision? And in this case, even with this drawdown, it's Thursday. We knew we wanted this sell. Can't sit around forever. And then the whole pending limit orders, I think, are really difficult to duplicate. Very difficult to duplicate. So again, I would make the same decision. And overall, I still support this trade. Technically, I gotta say, it's still valid. It is still a valid trade. You still have more room on the sell, but same kind of concept. I'd be looking for a short-term buy up before I try to sell it again if you're not still in it. And overall, great trade. So take that off of our watch list. Done. UK. I'm in love with this pair. I'm in love with it today. UK 4 hour. We're gonna go the 1 hour. We are here. We popped up, failed to make a higher high, and came down into a couple of take profits. And we have just been, again, this was Thursday, has just been sitting still. So before this morning, I did not see this ugly little wick this morning, this little area. More wicks of rejection, not in love with that. But when I zoom out and I try to take the noise out of this still has quite a bit of room. All the way up to the daily, we have this huge impulse, nice retest of the 50. Huge impulse. Don't really come close to the 50. It's been a long time since not only we've touched the 50, and this is the daily, right? But look at the size of these candles and the speed of this move versus this move versus this move. We're slowing down. And if we zoom in a whole bunch, we're flattening out. I still am very biased on this sell. We'll go take a look at it here in a second. but overall still very, very biased. So I'm going to hit 0, remove draw objects. Again, technically this trade is still valid before I even bother to delete it. It is still technically valid as of right now, but came into a couple of take profits. We will look for a new entry and see if we get one. No promises, no guarantees. So let's remove that. US 30. I love this one. I think we did the right thing. It did not have to play out this way though, just to call a spade a spade. It's easier to come into the market and scalp a little bit on US 30 when you're going counter direction, and we did that. Here's where we entered. There's our little green line. We came all the way up to here, give or take 2,700, 28, 25-ish, 100 pips. 2,500 pips all happen pretty instantly. No drawdown on this. Great way to be. Now, had we sold, would not have been bad either. This still never made a higher high, but not a lot of people can afford this, right? So I'm trying to be mindful of that. I get it even myself. This is a very small lot size for a very large account if you're trying to have a 4,000 or 5,000 pip stop loss. So real big deal, if you would. But remove this from our board. We caught that baby scalp. We also analyzed this together to know that this was a baby scalp and you would be looking for a sell. So a few people messaged me. They made a killing on this and this. Just keep in mind, Tuesday, we still have that sell running. We knew the analysis. Just a matter of when you can enter and re-enter. So beautiful trade overall. And that's it. So now I'm going to take this off my watch list, and we are starting fresh.
PMI just finished. I don't know what it was, but just keep an eye out if the market does move.
Thank you, Jonathan. We popped up for opening bell, but we're back where we started. Save profile as today is the 21st, 02/21/2023. So brand new template. Here's where we're at. We're going to Tuesday. Everything's clean. Everything's off the board. We talked, gold is not a heavy pip hitter, but gold has a very good potential setup coming. So we've got a nice little head and shoulders going on. We wicked to the top side. We just had news. Anybody know what the news is? Let's see if we can.
PMI was strong.
Thank you. So that's gonna make the dollar stronger.
Dollar stronger, which may reduce
The other.
other things. So hard to say.
Thank you.
It is manufacturer's index, so that could mean strength for stocks as well.
Okay. Thank you. I wonder. Sorry, I was fixing my chat. Nice wick to the top side. I was really excited to come analyze this, but right here, I'm not super excited. So we've got some reason to be looking. We've got a potential head and shoulders. Got a nice wick of rejection. So we'll go all the way down to the 15-minute to say, hey, we're waiting for this. We've got to buy. And we're sitting technically at where we would be sitting if we bought this. We're actually at a better price point. So now that we know that we're at a good price point, this is what, 53 pips. I'm going to drop a 0 because this one's a little bit off on this broker. That's okay. Which make this 20. So we've made about two ATR in the 15-minute time frame is how much we've moved. So I'm going to keep tracking this. I'm definitely looking for the potential buy when and if it sets up. We've got a 15-minute. We have that right now, but we're moving down. So we're going to try to be a little bit more mindful. Here's our 5-minute. I don't know if we're going to get a re-entry, but we want to try at least mindful of it. That's a nice gap to the down though. We'll see. Not chasing that entry just yet. Let's go to US 30. US 30, huge impulse. This is opening bell. Wish I would have caught that, but we were talking. 1,200 pips. That's the little bounce we wanted. That would have been enough for the day. I already said once, and I'll say again, I'm not selling here. So if you guys have the wherewithal or you're going to manage here, by all means, you do you. I don't personally think this is a great stop loss. I still think it's got a very high likelihood of being broken. So for me, I'm not looking to sell here. That's me. It doesn't mean you have to follow the same thing. I'm just telling you what I'm seeing. So we've got a 1-minute potential arrow, and yes, we're breaking lower lows. So for opening bell, we spiked up, which is a really good indication. We don't make decisions based off of this, but when opening bell spikes one way, a lot of times that day moves the other way, right? We see that often. Not to say it's the only way to be, because it's not, but we know it's a very decent probability, right? So this is taken off now, and we missed that little buy up, and I'm simply not selling here. So boo, it is what it is. Missed that boat. 5 minute. Yuck. If you guys, let me do this. Let me pull up some other brokers. US 30. I got S&P up. Okay, so I'm going to try to keep this up off screen on the 1 minute time frame. If you guys can help keep an eye out, say, hey, look, we're getting close to a potential entry on the 1 minute, I will consider coming to this. But otherwise, I'm out. I'm simply not going to sell down. I think we have a high probability of forming a spring and another retracement. So I don't want to get stuck in a spring, personally, with the stop loss that big. I don't mind facing a spring if the risk and reward makes sense. I do mind getting stuck in a spring if the risk and reward is treacherous and you have a high probability of getting stuck in a spring. This is a 4-hour time frame. We've been really respecting this level for quite a while, a very long time. So really, this has been a zone. So I want to sell this. This is daily. I want to sell it long term. I want to sell. I need the right moment to do it. And for me, it's just not it. Sorry, y'all. Ooh. I'm trying. I was muted again. You think you could sell NAS? Let's go take a look at NAS. NAS is a little bit better in terms of risk and reward, so you see where we're at. So remember, this has moved more though. So if you look at the big picture, this is the daily. Here's where we're sitting. We've got a nice little double top. This is the less risk to reward. So yes, I think you could sell NAS, but just know you're at an area of interest, right? So let's game this out. I'm gonna go to the 4-hour just so we can see. Zoom in at least one. I'm gonna hit sell. So even if I'm putting my stop loss here, this is a 4-hour plus some room. That's our recent structure. And all we're doing is getting like to this next higher time frame 50. My risk to reward is about a 1.5 to 1. Not horrible, not great. Oh, stop it. Listen. Hold on. Let's try this again. I completely lost my little tool. Figure this is where I'm going. I'm barely at a 1.5 to 1. And that's the bigger picture. So figure we're going to get some kind of a response in this window, which is, as 0.7 to 1. So can you make some money off of this? You absolutely can. Like you can, it's just, you have to be willing to know that you're taking an against the odds trade. And I try not to do that. Independently, I might make different decisions, but when you're trying to lead other people and other people's monies, hopes and dreams on the line, I'm a little more mindful, which is 99% of the time a blessing. But to call a spade and be completely transparent with you, there is a few percent of the time where it is not a blessing, because then I'm being overcautious, right? And I want to say that out loud because it's important as you guys are gaming out your own thought processes and figuring out your own strengths and weaknesses. I want to come to the table with mine. So am I being a little bit overcautious? Absolutely, I am. And I'm telling you exactly why. My risk to reward ratio is not good enough for me to be more risky on these two trades. That's my answer for me. For me. And it doesn't mean you have to follow suit. You're going to get some kind of a play here. And of course, if we continue to break below here, if we break this level, this price point, which we know is a very high likelihood. So it's, what is that, 11,826 area? If we break this, we're going to expect an impulse and a retracement. Overall, you've got a great trade. But for me to enter it right now, as a team, as a group, as a community, no, I'm out. Which it may very well be overcautious. I promise you, I'm incredibly risky. I am incredibly risky at some things. It's really something I was thinking about heavily last night, is how I can be such a walking anomaly. I am such a walking anomaly, I think. I'm very risky with many things. I'm not afraid to show up in my yes. I'm not afraid to, not morally speaking, but make a whole bunch of, here, we'll try this. It might not work, but we'll try this, kind of decisions along the way. So risk is not something I'm super worried about. But then there's other areas where I am completely out of no risk, 0% risk. I don't know why. It's just how I am. Always working on it. But here's UK 100. This doesn't look as good on the small, true, Swazi, very true. On the small time frame, this doesn't look as sexy. I get it. 15-minute time frame, 30-minute time frame. I'm going to keep bouncing up until we see what we're looking for. Here's where we're at on the 1 hour. We're in seller's territory technically. Now we've sprung down pretty big, pretty good. Overall, again, if we look at the big picture, we've got a lot of room. So I'm going to go to the 4 hour and just mark this up, because this is one of the better trades we have on the table as we speak. It's just one of the safer, better trades. So down to the 4 hour, here's where we're at. The wicks are scary. They're very rejecty. We don't like, those aren't fun to see right now. But if I hit sell, I'm going to zoom this down a little bit, and I have my stop loss. Here's our fractal high on the 4 hour. Add a little bit of room. Figure my target on the low end is still what? The ADR high, ADR low, if I could talk properly. I'm still at a 1-to-1, and this is 4 hour, by the way, but that is not my target. Overall, we've got here is where I'm looking for. That's a 2-to-1. I'm also looking to break this low. I'm going to target prior to this low. Now we got a 2.5-to-1, right? I'm looking all the way into, remember, this is a really flattened area. This is consolidation. This is the high point of this consolidation to the left. You can't see it. At a 4-to-1. This is a risk that I would be willing to take. So I'm 100% on risk. I just want to have smart risk. And so 100%.
And what's that stop loss? How many pips is that stop loss from where you're at now?
Let's go back to it. Let me mark this up first. I'm going to put this here just so you guys can see where it's at. I'll go back to the 4 hour. So hit S for sell. Bear with me. So this stop loss is, here's our fractal high plus a little bit of room. So there's our fractal high, and I'm going to move it up a little bit higher because I like to have some room. So from where we're currently sitting in pips or points, this is only 450 pips. But this isn't a fast mover like US 30. It's not as aggressive. So it's still a hefty amount. It's a pretty big amount of pips. Something that we talk about is 3% is 3%. So if you're risking 3% on this trade, 3% in 400 pips on like a gold, and 3% in 20 pips on a US 30 is still equals 3% of risk. That's why taking your lot size based off of the different pairs in your stop loss is so important. Super important. But look, this is what, 1.6-to-1 risk to reward. This is where I'm looking to go. That's a 4-to-1, 4.4-to-1 risk to reward. I can live with that. Who cares? Right or wrong, I can live with that. So even if I'm only getting 1-to-1, 2-to-1, and we get a reversal in this window, cool, I can live with this decision. Whereas on the flip side, if I take a trade that the big picture's only barely 1-to-1 and I lose, that means I've got 2 or 3 trades that are, let's just say negative 3%, 3%, 3%. And I've got this one that I've got 1.2% most. So that makes a losing day, not a winning day. It just kind of all comes out in my floofy math equation, if you will. But this is a great time here. I'm going to mark this up. So we're going to W. I do have S&P up off screen just because it was a little bit slower. Got some more wicks. I'm going to continue to track that. Of course, I want US 30. But I said from the beginning, and I'll say it again, I'm not chasing that trade. Simply not doing it. So let's mark up UK. This is a good trade across the board. So we've got to take profit here. Pretty simple. Going to the line chart, taking out all the noise and all the question. Where else are my take profits? I like here. ADR low is pretty magnetic. I know a lot of people who trade with that. You can keep it here, but since we're looking really for, what is that, 100-ish pips on this ATR? That's 200. Yeah, I guess I'll keep that there. Looking for it to come into this range. I can live with that. This is our first kind of smaller scalp size target. 250. I want a little bit less than that just because this is a smaller ATR. So this is what I'd be looking for. Now this is too big of a zone, so we need to split this zone. I like this area. I do want to see where the bodies sit for here because I like it visually on the line chart, but now let's go look where the bodies are sitting. That's the base of the body. I want it a little bit toward the top of the bodies before this breakout. It's a little bit higher up, and that's it. That's all I would do. 100%, super easy. And overall, this is a good risk reward. So let's assume that we're not that right, that we're off. And this is all we're getting, because this is where my major target's still going to be. I'm still the 2 to 1, and this is where my major target is. That's how I'm making the decisions I'm making. Is if that's where my major target is, and I'm still the 2 to 1, I'm good. I don't have to have it all. I don't have to always be 100% right. I don't have to have it all together. I don't have to have it all figured out to be a really good trader. I just have to have really good rules in place that protect me from me and all the variables I bring to the table, that protect me from the market and all the variables it brings to the table, and that's it. So 15-minute time frame, we've got a potential entry coming up. We don't want to wait. 5-minute time frame, we've got a current entry right now, back to candles. So if this is our base, I'm gonna bring this all the way over to right here. So the candle prior to the one that we're on. Now, unfortunately, this is gonna be hard because I really want to get this body, but this has got a pretty thick spread because it's a foreign. Let's see, red. Bear with me here. Got it. Let's see, I'm gonna leave it right here. So this is gonna activate. 7983 is the number I'm gonna type in. Oh, nope, I just fibbed. I'm gonna go over and be later than that. 7983. I'm in this trade. Just the spread alone, I can't not be. Because the spread is, you guys can see the spread kind of coming into that window. That's it. I've got coffee in a very special. Does anybody know what the Starbucks Reserve is? It's like a big deal. There's only a handful in the world or something like that.
You talking about the reserve shop or?
Yeah, I guess there's only a few in the world.
Yeah, I've gone to the one in Seattle. It's actually really nice.
It's cool, huh? It's a unique experience.
Yeah, it really is. It really is. I guess that's what they're experiencing in Italy and some of these other more enchilada coffee spots, but it was really good.
That's awesome. Well, so we went to the one in New York with Rosie, and of course, since she works, part-time at Starbucks, she was completely infatuated. I mean, out of her mind level of bliss. So this morning, when I went into the kitchen, she laid out hers. The bliss belongs to her. Her special little reserve coffee mug, and put it on the Nespresso machine so I can make my cup of coffee. It was really sweet. But that's what I'm drinking out of today, guys. Is a very custom, one of a kind thing. That's what that whole reserve thing is about, is all custom, one of a kind. It's supposed to be unlike anything else because you can get all the blends. Did you try any blends while you were there, out of curiosity?
I did some flights. I even had the cocktail. And then I wasn't impressed with the food, but I decided to just try it, since they said it was supposed to be next level from what their normal stores are, but that's not saying a lot.
Fair. I also was not impressed with the food, so don't tell her I said that. Oh wait, she's gonna hear. It's not impressed. Wait, in all fairness, I don't think she was impressed either with the food. So
No, but it was unique though, the whole setup and everything like that. It's just like if anyone has an opportunity to actually go to one of the reserves, it's like a unique trip to take and have fun, especially if you have some loved ones or friends to go with.
yes, it's just that I'm all about that, you guys. The unique experiences, the one of a kind things, because life is too short not to. So too short. But of course you went, Jonathan. I could see that in your personality. In Seattle, huh?
Yeah, Seattle. Awesome city, Seattle. I know you're still trying to do the Wales thing. I'm still trying to work up to that. But
You
if we
guys
do it eventually, I might go out there with you. We'll see.
listen, chicken head. Who's gonna go kayaking with some killer whales if I go? Huh? Which one of y'all are brave? Come on, there's 37 of you. We've got one trade on the table. We're gonna make some money today. We're gonna go over to the US indices here in a second. But who's gonna break? I said not me. Listen, baby. Chicken head.
I will.
I'm not.
You're not. No. All these? You guys, they don't eat people. What is your deal? They don't eat people. You just kayak.
Not on purpose.
I don't know. I live in a world where things are always working out for me, so I'm okay with
You
that.
see what they do to seals.
You see what they do to great whites? They play with them.
They can knock the boat over. Yeah, but they don't eat you. You'll freeze. That water's so cold. You won't die though. Nobody on here. There's not a okay, Jonathan. Now you have to because you have to prove that you're stronger.
Well, I saw the movie Free Willy. I'll do it.
See, there you go. He's like, I saw the movie Free Willy. I'm in.
How are they when they're around, like when they have their baby orchids? Do they get like very aggressive towards that?
Yes, of course, every creature can be aggressive, but here, ready? I won't hurt anything. But even me, we all have that in us, like to where you will, if somebody's coming after your daughter, Jonathan, are you gonna be a little bit, aggressive?
Yes, of course,
Okay,
yes.
there you go. See? I mean, we're talking about them like there's some crazy situation of no, they're not. No, I think they're fine. We'll be good. I promise. I want to go to Seattle. There's a quote that says something like there's only 3 cities, and of course there's a lot of debate on who said what, but it's what is it? New York, Washington, and San Francisco. But other people say it's New York, New Orleans, and San Francisco. Anybody have a counter narrative on that? Anybody at all? Let's see.
We're definitely not talking cities unless Chicago is in the mix.
Fair. I could see that. I could see that for sure. Definitely. All right, guys. So this is what I'm looking for. Here, this is my box. Briki did 5 tigers in a cage, but won't get in a boat. I can't with you. The level of your brain switch. I don't even know what to tell you right now. Hold on, let's analyze this, and I want to hear that story. So this is our major target. This is it. This is where I'm looking to see what happens. This is just this liquidity void. This is just an area of interest, right? I basket all that stuff together because people are constantly mislabeling, relabeling, renaming, and coining and trademarking their own concepts. So really simple. This is an area of interest, a compiled area of interest that we're looking to see get retested. If we break this area, we want some kind of an impulse or a retest, right? Some kind of a retracement, go to a smaller time frame and take it to the next area. For me, that's going to be right here. This is going to be a really key zone. And I think for that reason, I'm going to even make this super fat. Let's make this thick, really big. This is going to be a key area. We break this, I'm going to expect, I don't mean wick at this. I mean break with oomph, with a full body candle. I'm going to expect that impulse and a big retracement, but then I'm definitely looking at the downside. If we fail to break this, I'd be willing to buy it back up. That's how I'm seeing this. So this is a great trade. It's not the only one I wanted, but at least it's one I can know it's a good trade. We don't need 500. Most of all accounts, including my own, can't afford to take 500 trades. We can't go take 5 trades in a day. You can if you're doing 1%, but even 1% on US 30, because it eats out your leverage so much and your margin availability, it's expensive. It's an expensive pricey. Let's use that word. It's a pricey situation. So there's UK 100. Euro USD has not made its major move yet. We've got a couple of options. So I'm gonna leave it to you guys. Euro USD is, here's where we're sitting. We broke below the daily 50. We've got a double bottom forming. Okay. We've got potential head and shoulders, not quite. We've got a bullish candle as we speak right now on the 4-hour time frame, looking for a bounce. The risk to reward on this is not bad. We don't have a lot of reason to be chasing it right now. There's your little head and shoulders. You're at the right shoulder on the 1 hour. So you're at that kind of getting the earlier entry. That's what it's going to look like on the bigger time frames. It's going to look like you timed the bottom, but you didn't. What that really would be is you went to the 15, nothing here. You went to the 5. I don't like the 5 for Forex, but you went here and said, okay. So you've got a couple of choices. Euro USD for a trade. Gold, let's see what gold is doing. We got that little retest on the 5-minute, just like we wanted, so we're at a good area. Gold for a trade. US 30, still pushing down. We might have to just hang tight on US 30. I will scalp it when and if it's ready. It is not there. When and if. When and if. But we're pretty far away, so I'd be taking at the break of this fractal, not here. Little baby amount of divergence on the 1 minute, not super heavy. But pick one of those 3 that you want to sit with for a little while. Euro USD, gold, and of course, love US 30. Can't go wrong with US 30. S&P is a little cheaper, but not in love with that one. US 30 is easier to scalp on the baby time frame, so get those pips. For me at least. Anybody want to weigh in? Euro USD, gold, or US 30? Which one are we tracking for a minute? US 30 is not ready. Euro USD. Okay, Ellie, are you trading a lot of Forex pairs? Peter said gold.
It's not Ellie, it's me, it's Michelle. Hi.
Hey, Michelle, how are you? What's up with all the names? How am I going to keep track with that?
I don't know why. Probably because I signed in her iPad as Ellie, and I don't know how to switch it back because I'm on my regular computer, so I don't know how to do that.
That's okay. I get confused on how to do all that stuff too. I'm with you.
Yeah.
Michelle, are you trading a lot of Forex pairs?
I mean, I trade the GBP, USD, EUR, and AUS. And even though I'm trading them, I have never made a profit yet, but it's okay. I'll get it eventually.
Okay, so you've been trading them, but you're not making a profit yet. Do we want to talk about that?
I just think it's a me thing, to be honest. Following the rules, doing the rules. It's a me thing, really, I think.
Okay. Well, if you want to help game it out that you thing, that's what I'm here for. Is 90% of the things I experience in life are me things, and that is sometimes the hardest battle to face, right? But if I could just have somebody hold my hand and walk me through a couple of the me things, I think I could get a lot farther, a lot quicker. A little bit of, TLC and guidance. So I am here for that if you would like.
Let's try Thursday. I'm gonna try to make sure these kids is not up and out, and then we could try I'm gonna try Thursday because right now you hear the music in the background and all of that.
Deal. Okay. I'm here for that. So.
Okay. Thanks.
You are welcome. Because ideally, guys, that's all we want to do. That's all I want to do is to be able to say, hey, look, I am not by any means an expert. I am not by any means a lot of things, but there's this thing that I'm pretty good at, and I'd like to share it with you because I think that it can change your life. Like, this is something I'm passionate about. I love business. I love people. I love the concept of making that impact. And whenever I die, my children hate when I say that, but whenever I'm gone, and I know I'm too young to think that way, I want to know that what I did on this earth was good, right? I want to know that what I did on this earth helped somebody make an impact, or just little things. So, and this, I don't know, this is my arena. I didn't necessarily choose it, but I was called to it, and this is my arena without a shadow of a doubt. This is it, business.
Yeah. I wanted to just like the other day, I was like, I might as well just get up because I'm not getting it. I don't know what's wrong. And then I was like, nah, you can't give up. You can't give up. You have to stay in it. You have to stay. Yeah, I get that frustrated. Like, just forget it. I'm not doing it. And then I was like, nah, you can't give up on yourself. That's like giving up on yourself. So
you can't. Like, what else did you do for a living? I forget.
I do billing for the hospitals. Nothing major. Boring.
Okay, so I'm sure you have this ridiculous list of all the things you're supposed to do, like your compliance of do X, Y, and Z, right?
Which is true.
And I'm sure you're very proficient and skilled and like an expert in your arena, right? So you'd probably follow that list, right?
Which is, yeah, it's, yeah. And that's the thing. I'm detail oriented with everything I do. It's like A, B, but it's a me. And I got to figure out how I can focus on just doing this and following the rules. I wrote it down. I got it laminated, everything. And it's just, I don't know.
I think I remember you vividly, Michelle. You can correct me if I'm wrong, but I think about several months back, right? Weren't you one of those that came out and you were on, you were seeing it. You're like sort of you're sort of like in the zone, if you were, and you were seeing it. And I think you were talking about some of your successes that you had. So are you just going through like short-term like funk right now? Was that you, or was I mistaken?
I mean, I see it, I understand it, I get it, but I don't know what it is. It's like I'll sit here and I'll be like, okay, it's gonna be it's a downtrend, cool, and I'll see it exactly how I say, and it does what it's supposed to do. Then when I decide to get in it, it does the total opposite. So it's like, where am I going wrong? Like I would literally sit here and like, oh, look how I'm just making money pass. And then when I decide, okay, let me get in it, it doesn't make the money don't pass. The money just goes out the door. I don't know. It's a me thing. It's really probably a me thing that I'm missing something. And I literally, and prime example, GB USD around 6 o'clock in the morning, it always makes a move somewhat, somehow. And I'm like, okay, but I don't know. I don't know. I can't figure it out. I'm going to figure it out because I'm not going to give up, even though I wanted to, but it's just me.
But the cool thing is, it was some, I don't know, some motivational thing I was listening to. It was like, I think it was Jordan Peterson. He was, don't quote me if I'm wrong, sorry, y'all. Something on the lines of, a lady walks into the counselor's office and she says, I pray to God something is wrong with me. And of course, the guy's like, why would anybody wish that, right? And, you know, this is all paraphrased, but she goes on to say, well, here's the way I see it. Either something's wrong with me and I can fix that and I can work on that and I can improve that, or the whole world is, you know, X, Y, and Z, and then we're all screwed. So this method over here makes me feel peace. This method over here makes me feel like I have some ability to enact change and impact on my own future. Because if it's not something I can do, then I am doomed. And that's why people quit, is because when they're looking outside of themselves, I mean, I know it's hard to say it's just me, and I know that's hurtful and it sounds bad, but if it is you, that's great news, because if it's you, we can work on that. Now, if the market's just crazy and there's nothing we can do about it, well, then we all should just quit and walk away, because then we're SOL. But if it's you, that's great news, because guess what? We can go through and say, like Jonathan said, you were the one who came out a few weeks or months ago. Let's go back to basics. So how many trades are you taking? What is your risk percentage? What do your entries look like? How are you managing? Take that little bit of information. Let's create the basket, right? Our basket of information, and tweak and adjust accordingly. Because if it's you, girl, we've got you. We can help. Like, we can come and we can fix that. But if it's the market and the world, well, I don't think any of us are that strong. At least I know I'm not yet. I mean, I'm working on it, but I can't control the market. They keep telling me no. So that's a counter. I just thought it was super motivational to hear that. It was,
And I don't think it's risk management, because I have the ATM. I got it set up. It's not greed. I'm not saying, oh, I'm going to make a million, and it's just, I think it's something with me, with my entry. And another thing is, it's a me thing. It's going in the direction, and say it's going in bullish, and then all of a sudden I see it doing a pullback, and I'm like, nah, I'm getting out, and I jump out, and then it goes where it needs to go. So that's still a me thing. That's just that's the psychology that I need to work on. So I'm seeing things that is hindering me from what I need to do. However, I got to figure a way to fix it.
okay. So maybe actionable. First off, I love that you are self-aware enough to acknowledge, hey, wait, I'm doing this. So maybe an actionable item would be, take a list of the things you think you are doing, because perception isn't necessarily reality. Make a list of all the things you think you're doing, and then back test that against what your results are. So if you think what you're doing wrong is potentially closing prior to, go back and look at the last batch of 50 trades and say, how many of these did you manually close, right? If you think what you're doing wrong is your stop loss is too tight, go back and look at your batch of the last 50 trades and say, wait, where is the stop loss going with the ATM? Like, what time frame am I managing on? If you think that you're not scaling out or protecting well enough, go look at your settings, because you just said you have the ATM. Like, we've got the coolest tool in the market to be able to help us succeed in this industry. Let's go look at those settings and say, when and is it going to protect? When does the trail or the exit kick on? Because we can solve for that. This industry is stressful. It's hard. Like, there's so many moving pieces, and we can't possibly go into every single lesson all the time. And I get it. There's so much out there, but that's the downside. The upside is every one of the stinking, stupid, hard, painful, irritating things that we experience, we can solve for. And I don't know about you guys, but being an entrepreneur and a serial entrepreneur at that, I've been in a lot of companies and industries, and I promise you, there's so many things that you can't solve for when you buy land and build a traditional company, when you have rental properties, when you build a brand and have physical products, when you are on Amazon's platform, when you have a blog that's being ran and that work is being ran by somebody else, or you have affiliate marketing. There's 1,000 problems you run into you're not even allowed to solve for. Like, you are on your own. Like, you can't solve for X in those equations. But this right here, all the downside, the upside is we can solve for anything that we think is wrong, and we can test, is my thought right? If it's not that, then what is it? Cool, let's test to see if that's the case too. We can solve for all of that. So I'm here for it, I promise.
Well, could you go over the lot sizes
Yes,
as far
absolutely.
as you know?
So this is a perfect time to go over lot sizes. So number one, I'm gonna go all the time frames now. So we're trying to find this entry on the 5-minute time frame. So let me first go over the two pairs that we're in, UK and Euro USD. So this is Euro USD. Here's our 5-minute entry. Of course, you can take it at the bounce of the 50. That's not a bad way to be. It's just not as confirmed. It's not as duplicatable, right? So it's earlier. You get more pips. There are pros and cons to every decision we make in life. So not a bad way to be. We bounced off the 50. This is a great potential entry, especially coming down a time frame. Look, we're kissing both 50s. This candle is great. This candle is great. So you can already be in this if you choose. But for duplication and consistency purposes, here's our 5-minute entry. Here's the body of that candle. I went a little bit earlier than the wick. This is, I'm trying to take a trigger entry on a bigger time frame analysis. So here's our 5-minute. Here's where my pending buy is. I do have that live on my other screen as well. I've got it typed in as 1.0668, 1.0668. So I guess a little bit sooner than that, because I'm always rounding a number to kind of give you guys an idea. So that's Euro USD. Let's go up and look at those targets. Here's what I'm looking for. Our first target should be pretty small. This is a Forex pair. This has only got an ATR of 12. Really? Am I wrong? God, that sounds so small. It is small. So this is about a little bit over 1 hour ATR. So I wouldn't even mind if you got a shorter target than that. Totally up to you. I like this area. Here's our fractal. If you want that extra target that's going to be a little bit more scalp-esque, let me get this going in here. Hold on. Make this blue. We've got our little scalp-esque target here. Looking to the left, looking for our areas of interest. Because this is a really tight zone, I'm going to go ahead and manipulate this up just to, if that will let me, just a little bit. I want this zone, this body of this area. So I'm a little on the high end over here, but I can live with that. And of course, we've got our more scalp target. All this is saying is when we break this zone, we're going to protect pretty quickly or scale out of a portion of our trade, right? And we're going to let the rest run. So here's the 1 hour time frame. We're going to pop all the way up, kind of potential head and shoulders. We're at this right shoulder. It is kind of crooked. So your measured move, go to the line chart so we can measure it together, is going to be what? Here's our neck, here's our low, that's 40 pips. Here's our neck, here's our low, that's 27. And because this is crooked, technically, a little bit deformed, if you will, that's 40. So 40-ish pips, right? That's going to put us in this range. So anywhere between here and here. So for our measured move. Great overall trade analysis, no guarantees. Likelihood of being able to hit a couple of those targets really high. This is the bigger portion. Great risk to reward, great way to be. So here's one trade. Not going to be worth a fortune, unfortunately, but if you're taking a 5, 10, 3% trade on this, it's worth the same 3% as if you're taking it on another pair. So here's one trade analysis. Great trade overall. It's just the better, safer path. Here is UK 100. I am in a baby amount of drawdown on this, not a whole bunch of pips. I don't know how many pips. Hold on. I could tell you, maybe. What is that, 7-ish pips drawdown? But I've got 2 entries, so not a whole bunch of drawdown, but I am in drawdown. So I'm going to let this play out. This has a lot of room overall. Here's my major target. Great risk reward. Please give this spring room. This is an index, and indexes like to make these little ugly wicky springs. Otherwise, I think we've got a high probability trade here. So 2 trades, not necessarily the US 30, you know, the baby that I super want, but if it happens to pop up somewhere in discussion, I don't mind going to take a look. And for conversation purposes, we've got gold. Again, head and shoulders, impulse, a little consolidation. I wouldn't even call this, you know, this is almost one impulse. Here's our little flag pattern, impulse. 1 wave, 2 waves, just looking for a bit more of this buy before we get another wave to the downside. This is still looking like we've got plenty of room to sell. The economy itself says, fundamentals say this is buy, 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 buy. No matter what, fundamentals say buy, 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 just so we're calling this a spade. And also look to the left. So we're sitting at an area of interest, a really key area, by the way. Let's get our this, and then we'll talk about lot sizes. And we'll use gold. So 1838. Remember, I don't know much, and I haven't been around too long, but even when I first started trading, 1800 was like the magnetic price point of gold. I don't know if anybody else remembers that, but everyone talked about 1800 when you're buying and when you're selling. It's just the price point that everyone's always talking about. I don't know why. I don't know the foundational reason, but we know that this is a super key area. So we never quite made it to 1800 on this nice little pullback. I think we've got some room to sell down a little bit more. That's going to put us right into this range. I do think we're going to come and kiss 1800 on the sell side, but for now, this is the daily time frame. Just looking to buy it up. To go all the way to the 1 hour, I guess I am going to mark this up. No buys here. Perfect head and shoulders. And it's not just a head and shoulders. Everyone says, hey, let's look at the head and shoulders. 30-minute, beautiful head and shoulders. But what makes this important? It's a nice pattern at an area of interest, right? We've got an area of interest from January. We've got an area of interest. This is perfect from all the way last year, from May of last year. So this is a key level. We don't care about patterns and what have you if it's not at a key level. We care a lot about them if they are at key levels. So had to at least address that. Again, we're sitting here at an area we've stopped before, right before an impulse. Cool. All the way down to the 30-minute time frame. Yes, let's mark this up, and then we'll look at lot sizes. So while I mark this up, let's start talking lot sizes. So for the guy who's asking me, if you can unmute yourself, I'm going to mark this up. For anybody who's not familiar with how I do what I do, hopefully we can learn to talk, look at chart analysis, and have great conversation. Trying to find that balance with everybody. Lord knows that's the truth. But come on out. I'm going to be marking this up. I'm going to put this as W. As we break above the line that I draw, I'm going to be entering. I'll put my broker, my live entry on my swing and my scalp brokers accordingly, just to kind of manage different ways and to get different amounts out of these two. But that's what I'm going to be doing while we start to begin to break down the concept of lot sizes. So Vincent, tell me a little bit about you. How long have you been trading? All that good stuff. And then we'll go into what you have been doing for lot sizes.
Okay. Well, I've been trading on and off for a couple years, and I just recently just started back, get back into trading. I done traded mostly forex pairs and a little bit of crypto. So I don't know. I'm just really trying to get the indices down as far as how they pips work, the difference between them, and so I can start using basically a strategy as far as stop losses and my lot size is what I want to use.
So what lot sizes are you using when you're trading forex pairs?
Forex pairs usually I use like $1 lot size to 1,000.
$1 lot size. Because ready, I'm gonna pop around for a second. So this is $10 per pip. This is 1078 per pip. This is 622 per pip. So when you say dollar lot size, what broker are you on?
Hugo's.
So you mean a 0.01 or a 0.1?
No, I usually use 0.1.
0.1. So it's
10 cent.
Gotcha. Okay, I had to break that down in my mind for a second. Sorry, took me a second. So, and you're just using that across the board, even if it is something that's worth $6 versus 10.
Really, it depends. Like on Great Britain, JPY pairs. Usually, I usually trade them a little differently because I know they're worth more.
Also, you
But
said you have a $2,000 account, correct? That you're currently managing, correct?
yes.
What percentage of that are you trying to risk? Because that's going to also dictate what Jenny's going to recommend for your lot size.
I guess I'll say like at the most like 5%.
Okay, so let's go see if you're right. I mean, I think that's the coolest thing that we can do is together see if you are doing 5%. Before we do that, here's where we're at. Here's our 5-minute buy gold. I've got it marked up. So we've got 3 potential trades on the table, right? We're in them. 15-minute time frame as we break above 1839. So I've just got 1839 flat out. I'm going to my live broker, 1839 flat out. Still in drawdown on UK, but not on EURUSD. Hold on, let me find gold. Takes a second. So 1839. Gotcha. So 1839, that's my price point that I'm entering. Now this is a 15-minute time frame. I do want to look at the head and shoulders, and then we're gonna go talk about these lot sizes. So I'm always under targeting my take profits, right? And overextending my stop losses. The opposite of what everybody in the market wants to do. I know, I get it, I hear you. 128 to 167. The reason I'm doing that, just so everybody who's listening, is why. Because if everybody else is doing the other way, the market knows how to knock out everybody else, right? The market knows how to consistently take all of that money. If you're willing to stand bold and strong in your analysis, bold and assured in your analysis, and just let it play out, you'll be able to get a lot more out of these. You'll have that 80-90% accuracy really easily. Like, it's crazy how easy. But here's where we're at. 30-minute, we've got a buy. We've got all of our indications say good. We've got a head and shoulders. So figure our first measured move target is about 120 to 150 pips away. This is 300. This is 170. This is 73. So the first thing we're gonna do is get a scalp target, because this is still pretty big target, right? So I'm gonna get my scalp target. Just looking to the left, I'm gonna make this blue. Looking to the left to where price stopped before we got that nice little impulse to the downside. And I'll zoom in if you guys wanna see why I'm choosing here. As we come into this price area, all we're doing is we're gonna protect our pips. And that might mean drag and drop your stop loss up. That's my least favorite. It might mean trim out of some of the position. That's my favorite. And that's not necessarily the most profitable. I will say again publicly, it's not necessarily the most profitable. It's just the most peaceful for me. It just works for me. So this is our scalp target, right? Figure 25 pips. Remember, this broker is a little bit off on that tool. But that's about 1 ATR in the 30-minute time frame. So we can live with that, right? Now the measured move is about what? We said 120, 150. So we know that this is 70. We know that that's 190 if I'm not mistaken. I'm looking to split this zone, and I'm looking for an area of interest. So now I've got to go to candles so I can see what's happening. And I'm gonna have to go up a time frame so I can see the bodies of these candles. I can't see them well enough on that. So let's see. Here's where we are. That's our 160, 170. That's our 120. I like that. Remember, this next higher time frame 50 is going to be much lower by then. So even coming into this zone, all that's going to be is a wick above the 4-hour 50. That's all it's going to be. It's going to come up and retest, break above the 4-hour 50 enough, and then we might get the continuation. But we'll see. So I like that target overall. This is where I'm looking for price to go. If we break above this zone, cool. We know that we're looking for our future targets. If we fail to break above and we just come and wick off the 4-hour 50, a little bit above, cool. We know that we're going to continue to sell to the downside. Really, really simple overall, not too complex. It's a pretty big area here, and this is what I'm looking for. I'll take that body there. Of course, this is kind of a bigger zone because this is in between a Forex pair and a index. It's our metal, so I like this one, and that's it. So any questions on gold before we go heavy into lot sizes? And we're gonna go test Vincent's math for a second.
Hey, Miss Jenny, I'm gonna have to jump off here to go to a doctor's appointment. I've had that issue with it's saying that I've opened up too many ATMs or whatever. Can you tell me how to just cut that off?
Yes, sir. So I think Scott messaged in the group too. So look, if I have ATM on this corner, so ready? And notice that there's no ATM on this corner.
Well, I can share my screen and show
There
it to
go.
you.
So I will,
Would
if
that
you
be?
go pop off, that's okay. I'm totally here for you, but I'm gonna have to help Vincent first because he asked, okay?
I
So
got you. I
real
got you.
quick, I want to tell you that if ATM is in this corner, okay, it can only be in one corner. So if you have multiple charts open, you should only have it in one of them. So like we talked about on the day we were together, what you would do is you'd take the ATM and put it on your far furthest left tab. And then on every other platform, you can have the settings running, but no ATM on it, okay?
Okay.
How you
All right.
remove that is go right click on your chart, go to, it's not going to work on this one because it's not here. Right click on your chart, go to experts and go to remove. You only need it on the one tab. Don't have it on any other tabs, and then you're not going to have that problem.
There are a couple of provisos on that. Assuming you're running manage all trades, and I know you're using Jenny's settings, so you are using manage all trades, so it can only be one copy. Jenny said platforms, and what she really means is charts.
Okay.
You can have it on only one chart on a given platform.
No, Scott, I do actually mean platform, just so you know, because there's been times where I have a platform open and running ATM on a chart, and I've got a platform, the same logged into it, the same account, right? So the
Okay, let me use a different one, account.
yeah, there you go.
Yeah, so
Account
you'll
trumps
only be
all.
running one copy of ATM on a given brokerage account if you're managing all trades.
Yeah, I am. All right. Thank y'all so much.
Okay.
You are, and then we can share it, so you can totally come out on Thursday, and either Scott or myself can help you bounce around or whatever. Okay.
Absolutely. Y'all have a great day. I'm probably going to have to jump off because I got to get up there about 11:20. So I appreciate it.
You are welcome. Have fun at the doctor.
Bye.
Yeah, I know, right? No one has fun at the doctor. No one does.
Hey Scott, real quick while I got you up here. On that little buddy, is the appropriate way to manage multiple trades on that is dropping that on any chart that you wanted to manage?
Yes, just make sure that you change the magic number for each of the charts.
Okay. All right. Thanks.
Yep. It manages by magic number. So just have a unique magic number for each chart that you want to be trading with.
Okay, perfect. Thank you.
Jonathan Lowe. So gold. Looky, if you're sorry, this is the wrong template. All my words, templates, charts, brokers, platforms. So wrong template. I'm back on the Tuesday template, right? Here's where we're at. No, I'm not. So when I mark up this line, first off, the intro at the beginning of class explains this really well. And if there's something you think I can add to it that's going to help, I'm definitely present for that. Tell me what I can do. But otherwise, this yellow line on TradingView, I'm marking up the candle part of the one we're on just as an analysis, a blanket analysis, trying to look at both narratives, the buys and the sells, where our targets would be. Marking it up kind of naked style, just analysis. When I come to MT4, we've got this cool Swiss Army knife. That's what these little blue boxes are, right? So this right here, I'm highlighting them in that aqua color to say, hey, look, we're in these trades, or we've called a trade idea trade analysis on these pairs. So you can see the three that we've done today, right? At the beginning of class, when you saw me reviewing, we saw multiple pairs highlighted. Those are the ones we did last week. So there's that. I use this yellow line. So I'm going to go down some time frames now, 15-minute time frame, saying, hey, beyond this point, if we break above and the line is green, we're buying, right? We break below and the line is red, we're selling. Dotted means I'm placing a pending order. Solid means I'm just literally dropping this line and going over there and hitting buy or sell, right? So dotted is pending, so buy pending. Solid is sell or buy active, right? So we, from this yellow line, from the marker of the time point, we have officially broken above, and now we're coming in to take profit one as we speak. So this is where we would have entered, right? So I went over and I just typed in 1839. That's where I got in, was 1839. Gotcha. And then the take profit, just so you know, how you manage is up to you. How I'm managing using an automatic manager, that's cooltradingtools.com. This is what I'm doing. Okay, I'm using this overall larger stop loss, which is going to put my stop loss here plus room, just so you have an idea. My stop loss is way down here plus room because it's using the 1 hour structure. Okay, these take profits I'm marking up are literally areas of interest, and I find them by knowing where price is going to slow down, stall, or potentially turn around. Really, I'm just looking at a collective amount of information, which is Those are your liquidity voids. Those are your supply demand, support resistance, all of those things, your order blocks, okay, your imbalances in the market, your gaps, all of that stuff gives this compilement of information. You've got your daily highs and lows. There's so many words and terminology people use, and then they get super overwhelmed and conflicted. So we called it an area of interest to make it super simple, to say, looking over here, here's a basket of information that we're seeing, and that's how we're finding those take profits. My instructions for the people on this call or this community, first off, the world is your oyster. It's totally up to you what you want to do. But secondly, when you hit these levels, you have a lot of options. Notice how these analyses are sometimes good for days. Like I'm trying to make sure I'm getting the most pips possible in anywhere from 48 hours to 5 days. That's how I'm running the trade analysis that I'm doing. I think I said that word wrong, but the trade analysis I do is good for 48 hours to 5 days. That's what I'm doing. That's my goal, right? Not to say it always works that way, because it doesn't. But the analysis is big picture stuff. So what do you do with all of these take profits? Again, totally up to you. The world is your oyster. You can put your stop loss where you choose. I'm telling you what I do to be profitable. At the end of the day, it's going to be up to you. My advice to anybody in the community when we hit these key levels are pretty simple. A, make some kind of actionable decision as you hit these levels. So make some kind of actionable decision. Trading with a stop loss and a take profit is incredibly simple. And there's not a lot of drama or thought process that goes into it. And to be very transparent, it's also very profitable. It is not a bad way to be at all, is to take your trade. Here's my stop loss, here's my take profit. Or hey, when I hit this take profit level, I apply a trail and then I'm done. I don't think about anything else. Or my trade manager in this case kicks in, I'm done. Not bad. But on a live call, I'd like you guys to see these areas so you can make many decisions if you choose. And what those decisions are pretty simple. Number one, if you have a standard lot size, close out a portion of it when you hit the first take profit or the next take profit. So option one is close out a portion of your trade. Option two, move your stop loss into profit and let the rest run. Option three, apply a trailing stop, right? Option four, let's say you were just scalping into these positions. We break new levels and you have bodies and continuation reasons to be looking for more entries. Cool, we broke this level, here, we retested. Come get another entry. Go to a baby time frame and get another entry to the next zone. Treat these like zones and you can go get many trades on this analysis, like we talked about on the other thing. Does that help, Jonathan? Low?
Yes, it does. That's up a lot. I was just wondering, so I appreciate it.
No, you're welcome.
Hey, Jenny, I got a question.
Come on out.
What do you do as far as, do you do a trailing stop? Do you put it into profit and let it sit there and ride, or do you just leave it as what you did originally and just leave it alone? If it hits your profit, if it don't, it goes the other way.
So on my right broker to the right, I'm running these settings. So the broker to the right, I'm running these settings. Now, if it's US 30, for example, or a couple of pairs that I'm heavily tracking, like I was with NAS for those few weeks, I will set up an alert system for like 15 minutes and I'll go take more entries along the way. So for example, on a trade like this, I got my first entry, I'm managing on a big time frame, I'll get an alert and I'll take another entry if it looks like we've got room and my stop loss would be good based off of where that entry kind of comes in at. So yes, I just let this run on my 1 hour time frame management. I let this run all the way. Now, granted, it scales out along the way. That's the first thing you need to know. B, it kicks in with different versions of trails and exits along the way. So that's usually what knocks me out if y'all want the whole truth, which is also why C, I find other entries. Because if this is the overall analysis and I've got one trade here, but it pulls back at that pullback, it might have knocked me out of the first one, but I've already got another entry running that got me here, right? And the blessing with using risk management now, to go to Vincent, who's been waiting patiently for us, the blessing with risk management is if this is a 5% trade, let's just say this is a standard lot size, I closed out a portion, I got some, blah, 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 it pulled back. Let's just say this is a standard. This is now 1.05 of a trade because what? My account is bigger. So there's more money in my account. So now this is a bigger trade and it pulls back, or I get another alert saying, hey, I'm looking for another 15-minute entry. Yes, I'm closing out of these positions at so many points because of the management, but I'm also getting an awful lot, especially if we're counting from the balance, what the best starting balance is here to here. This one move could be 100% growth if you're doing it right. One move, one pair, one time. Well, not one time. Does that answer your question?
Yeah. Thank you very much.
You are welcome. Okay, Vincent, my attention is 100% yours. We've got our 3 trades. I'm so sorry. Thank you for being patient with me. Love the discussion and participation, guys. You made my day without a doubt. So it just makes it fun, 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 fun. Vincent, okay, so you're saying you're doing, first off, you said GB. I could not help but notice you said GBP was worth more. Hold on, I'm going to mute all. And then hopefully Vincent comes and unmutes himself. Are you there?
Yes, I'm here.
Okay, so you said GBPs were worth more? Is that what you were saying?
Yeah, they usually seem like they're worth more than some of the other pairs, other the forex pairs.
So perception, right? And I'm saying this with love. Ready? Watch this. Euro USD is $10 per pair. I'm just gonna go. We already know GBP USD is also $10 per pair, so I'm gonna not pick and choose. I'm just gonna literally go to the next GBP. Is GBP odd? It's not worth more. So first things first, this information is the stuff that's seemingly insignificant. It's a lot to learn. It's kind of heavy, and sometimes there's no good way to really teach about this level of stuff because it's a lot. But my first piece of advice is Swiss Army Knife is a tool on cooltradingtools.com. I would super recommend getting it because it's going to tell you why you think that this is worth more. And if I had to guess, and it's not my decision to make, but if I had to guess, the reason why you think that this is worth more is because check out the ATR on this pair. This pair moves 150 pips a day, on the high end, 120 on the low end. Whereas Euro Chef moves 60 pips a day to 40 pips a day. So you're thinking,
Oh, I get what you're saying. Yeah,
yes, your perception is that GBP is worth more per pip. It is not. It's actually worth less.
it just moves more.
It moves more. So now, once you understand this, that's going to be step 1 to understanding this. Okay. So this moves a lot more and is worth a lot, but this is obviously the calculation is a little bit different because now leverage and margin get played in a little bit differently into this. So to you said you're doing a 0.1 per every $1,000, right? For Forex pairs.
Yes.
0.1. So I am going to go find this. Give me a second. It's going to take me a moment. Give me a second. It's going to take a second. So if you're doing a 0.1, and you also said 5%, so we're going to see how close you are. This is just to show you. So you're on Hugo's way. So you've got $2,000. And you've already said 5%. So GBP USD. Let's get the drop down menu. It's way easier if I just get the drop down menu. GBP USD. Well, that did not work. Also did not work. Ridiculous. You see that? Hold on. GBP USD. Got it. So I'm going to copy. We're going to keep this super simple for a second. Oopsie. Paste. And we're going to paste it here too. So 5%. Now, my next question is, we can't even get to the lot size topic until we just talk about where are you putting your stops and how are you finding your stops, your stop losses.
Okay. Well, like I just mentioned, I just really just started back trading, so I haven't been really getting into that many trades really. I just been really just last week just listening to you and trying to see basically how I should go forward with when I want to choose, lot size, like what should I, start off with, maybe just real small.
Okay, hold on, let me do this. I only got 2 hands. What am I doing? I think I want to share like a virtual background or something. Okay, gotcha. Got baby stuff over the place. So if I was to take a GBP trade with you right now, what time frame are you entering on? So if we bought right now, where are you putting your stop loss? Are you using, it's okay if you're not using a stop loss. A lot of people don't.
Hey Vince, if my advice is anything, that ATM that Scott's got for sale, I had an issue with what you're talking about is doing the right lot size and picking all that stuff, and that ATM does it all for you. I'm just saying it makes it way easier.
It does. But here, let's game this out, Vincent. So I know that this is the hard question. I'm not throwing you under the bus. So I'm just gaming this out with you because this is why. So are you still there? Or am I making you
Yeah,
shout?
I'm here.
Sorry. So if we bought this together, where are you putting your stop loss? This is
I'll
you.
I will put it below that from where it jumped up out that big candle impulse.
This one? This area?
Yeah, I probably put it like below that area.
So below this area, okay?
Yeah.
I'm gonna make this magenta, just so we know the lines are here, so I don't like wonder. Magenta. And I'm gonna put this as WW for discussion, just so I know to delete the lines. So using this analysis, right? I'm not cherry picking. This is a little bit late. This is 160 pips. Ready? Well, that's why
Mhm.
I wanted to show you this. This is 160 pips. And now that we know that's 160 pips, because I can talk. I can just keep talking for the rest of my life. Obviously, I've proven I've got that skill set in spades, but that's not going to help. So I want to do this together. So if your stop loss is 160 pips, well, we're going to say 165. Okay, that means your lot size to have a 5% risk on a $2,000 account is at 0.08. And this is not exact, by the way. This is not 100%. I mean, this is a really good guesstimation. This is a really good tool. It's a spreadsheet that was created by Kat, one of the previous members of the group. It's in the group files in the Six Figure Trading Coach community tab. So you can actually come get this. This is one method, but I wanted to start here because it really shows you, it just shows you what you're doing. So right now you think you want 5% risk, but as it is right now, if that is how you're managing, you're already more than 5% risk. Do you see that? So
Yeah.
oh, cancel, whatever, copy. Try this again, paste 165, just to show you. So for example, if your stop loss was bigger, okay, if your stop loss is bigger, 200 pips, that's less. If your stop loss was tighter, so like let's say you do have a tight stop loss and you're trading on, what time frame are you trading on?
Like the hour
Okay.
timeline.
Let's say you have a 50 pip stop loss. Check that lot size out. Just to give you an idea. So the lot size matters, but it's only part of the equation. So everybody wants an answer to what lot size, but you can't answer that without the rest of the equation. So I went through all that to tell you, A, we've got the golden ticket, which has lot sizes on it. And we're going to go over that in a second. B, you have this compounding sheet. It's free in the group. It's a good place to start. I would super encourage you to get something like the Swiss Army knife because it teaches you, it does a lot of stuff for you, and the ATM here soon. But start with understanding this spreadsheet, number one, if you're taking notes. Number two, my FX book, investopedia.com. There's quite a few free resources that have lot size calculators that will help you learn to calculate this because this ultimately is a skill, right? It's a skill
I
to go.
just dropped a lot size calculator into the chat.
Thank you.
Okay.
You have quite a few different resources to be able to do this, right? But first, figure it out. So first things first, this is a free spreadsheet. Second thing, myfxbook.com. You have investopedia.com. Let's see, what did you put in the chat, Scott?
My FX book has one.
Okay, that's what okay, perfect. There you go. So go there. I'm trying to pull up the chat too here. It's not going to let me. But those are all going to be great resources to start with. And that's going to tell you. So now watch this. Pick another pair that's not GU. What's your next favorite pair to trade?
Just say GJ or New Zealand USD.
Well, that's also a USD pay, so I'm not going to do that one. I'm going to go to GJ just for conversation purposes. Notice how this is going to change. So I'm going to go to 100 pips. No, that's not going to work for some reason. Try here. GBP, JPY. It's going to be different for every single one. Some of this one is broken. I don't know why. That's a me issue, you guys. But certain one of these pairs are not updating, and I think it has to do with the updated information from the broker. And I don't know if y'all's copy is doing that. I just know my copy is doing that. But the point is, I want you to see this firsthand. So you asked what kind of lot size you should use on an index. Now I'm going to go to NAS. Please know the S&P is much smaller. US 30 is much bigger. So I'm going middle ground for conversation purposes for a second. And now I'm going to do the same thing that we just did. I closed some other brokers so we could see some things. I'm going to go to NAS. If we took this sell, okay, you would put your stop loss here or here?
Let's see. Below that green line somewhere.
Below or above if we were selling?
Above it, I would try to put it above the moving average. I think is that the 50?
Yep. So this right here is 1,300 pips. So figure 1,500 is a pretty good guesstimate of what your stop loss would be on this.
Mm-hmm.
So now let's go here just so you can see this together in real time. So my user stop loss is 1,500 pips, which makes this not a tradable instrument, trying to keep above 500. So now if we were trying to make this 300, I don't even know if that would be enough. Nope. Definitely not enough. So you don't have enough to trade at that level of a stop loss with $2,000 account with this level, according to this spreadsheet. Now, granted, I can probably take a 0.1 on a NAS trade on a $2,000 account on Hugo's Way. I know that from experience, but I also know that really well from my own trades. I just need you to know that this is a big difference. So if you
Well,
have
you might be able to take a 1% trade.
if you have a 500 pip stop loss, for example, now you have some more room, right? But 500 pip stop loss to come back to here, okay, is what? Half of that. So for example, let's say we did take this breakout. We already got it broke. So if we try to take it here, we already touched it. So 500 pips is not a lot on this pair. It's not. And
What if I
that's
did like 1,000 pip stop loss?
okay. Let's take a look together. There you go. You got a 0.01. So when you ask why I take a 0.01 or a 0.1, I'm not saying it's the end of the world. It's I know a lot of people start there. Lord knows I started there, right? But if you want to get to the next stage in your trading, this is a whole nother, AP level course that you've got to get good at, which is understanding the lot sizes per the pair you're trading. So we just showed you that. You chose 5%, right? You said you're trying to risk 5%. You can risk 5% really easily on GBP, USD, on most Forex, on gold, even on S&P. Let's try S&P real quick together, and then we're going to pop off to the other chart so I can show you something. S&P, 500 pip stop loss. Let's watch this, 500 pip. Well, that's still the same, go figure. But you have a little bit more room on something like S&P for 5% trade. It's going to get a lot harder to do 5, 10, 15% and still keep a really good margin, minimum margin percentage if you're trying to do that on this size account. Now, if you're doing a 10% trade, okay, 10% trade, notice that, look at this come up with a tighter stop loss, for example. That's how you get to the 0.1 on an S&P. And S&P is the smaller of all the indices. It's the smaller of the ones. So it's not that it's impossible, but mind you, just for conversation purposes, let's go over here because I'm trying to keep it super real so people understand the super math here, because it is super math. Let's go to S&P. So same kind of concept. If we were trying to sell at this breakout, which of course we wanted to, here's a 260 pip. So we'll say 300 pip stop loss. 300 pip stop loss. 10% trade. That's going to give you a 0.0. What is that? 6? 0.06. And a 10% trade. You're going to have to be pretty aggressive to try to take a US 30 trade. US 30 10% trade with 300 pip stop loss. There you go. But if this is a 500 pip stop loss, which is pretty tight already, on US 30. If this is a 1,000 pip stop loss, way more practical on US 30, you're at a 0.01. That's 10% risk though. You're risking a lot, right? 1,500% risk. So I wanted to play with this for a second with you, just so you can get an idea. My homework for you would be play with this. This is in the group. It's in the files of the Six Figure Trading Coach community on Telegram. And then, of course, you've got my FX book, which is a trading calculator. You've got investinpedia.com. They've got all that stuff too. All great tools that you can go play with. But, and this is a big but, we also have a tool. So do you have the golden ticket from the group downloaded?
No, I think I had to download it.
Okay, so I'm gonna go ahead and let's manipulate this and let's play for a second. So I'm on the 1 hour time frame. I'm gonna go down. You said you're trading on the 1 hour. So this is a demo account. It's got $32,000 in it. I think it started at 20,000. I guess we don't really trade on it very often, but 32,000. And on S&P, I've got a 0.97 to give you an idea. So this tool, remember, I'm going to first call a spade. No tool, no calculator is 100%. The spreadsheet is not 100%. The tools are not 100%. The website's not 100%. There are variables in everything, okay? Variables in everything. And that's okay. It's not a bad way to be, but you need to know that so you can plan accordingly. That's the first thing I'm going to say. Second thing I'm going to say is play with each one of these methods, and whichever one best suits your personality, stick with that. Go stick with that for like 100 trades. Stick with that for like 3-4 months. Don't go from, I'm going to use this lot size, and then I'm going to use my FX book lot size, then I'm going to use the Swiss Army knife lot size, and then I'm going to use the compounding spreadsheet lot size. Don't do that. So play with each of them for a week or so, and then pick which one you like better, and then stick with that one for a good 90 days, 100 trade kind of concept. That's tip number 2. Got it?
Okay, yes.
Now let's go play. Let's see. Once you download this, oh Lord, I'm gonna have to do something with that indicator. Let's scroll all the way down. So what do we have here? So first off, this will allow you to it'll allow you to show you where your stop loss is at. And because I need to show you this for conversation, it's important. Right now, this is set to a 2 ATR stop loss, a 2 ATR lock profit, and a 5 ATR, 2.5 to 1. I'm gonna set this at 4. So it's a 2 to 1 risk to reward ratio, and I can live with that. So right now, these percentages that we're about to go over is going to be based off of a 2 to 1 risk to reward ratio and a 2 ATR stop loss. Now, you may or may not be managing exactly like this. So this is really important if you're trying to use this lot size, because you have to program this to be really close to what you're doing. So this is really close to accurate. Are you with me so far?
Yes, I'm with you.
Okay. So if I want 5% per risk per trade, this is going to give me 5% risk based off of this pair, based off of this stop loss right here. Got it? If I want 10% risk per trade, I type in 10. It's going to give me approximately, it's not exact, okay? 10% risk based off of this pair, whatever pair I'm on currently, based off of this stop loss. That's how this is going to work. And now we're going to go take a look. So I'm going to pop this off.
Hold on just 1 second, because it's not what you're setting for your stop loss. It's what you're setting for the multiply this by ATR to target calculate lot size. Okay, so make sure that is the same as your stop loss.
Fair, yes. So you can actually program it for risk or for reward. That's fair. But that's what this is going to be telling us. So I changed this to 10. So we're going to go take a look at what 10% risk looks like if I bought and sold at this very second. And the dots are turned on so you can get an idea of where that would be. So it's going to be a little bit janky, but I want you to see this. 2 ATR stop loss, 2 ATR multiplied. So it's 2 ATRs is where we're getting this from. 10%. Ready? I'm going to hit OK. The dots are now officially on. So assuming if I sold here, okay, my stop loss would be at this red dot. My take profit 1 or lock profit, and then take profit 2 or final take profit in this case. That would be giving me approximately a 1.86 lot size on this pair. Now, why is it so significant that you don't just do I do 0.1 unless this, because watch what happens with this. This is about to get really crazy. I'm not going to change time frames, staying on the 1 hour for all of them. But on odd USD, I have 11 standards for the same 10%. 11 cent, and there's fees, there's other things part of this. We're not going to go to that level at this moment. We're not going to break down every piece. It's just too much to go over, then it's not caught. But there are fees. You need to at least be aware of that. There are a lot of different fees. So 11 odd USD 1 hour time frame is what approximately. It's going to be different because the ATR is always adjusting. But Euro USD, pretty close, but still very different from odd USD, considering they're both pairs that have $10 values and they move pretty comparably, right? They move pretty comparably, but it's still different. See how different that is? That's big. GU is 6, also $10 pair, but it moves more. So 6 standard lots. Let's keep going. USD CAD is 12. Gold is 4 standard lots. Okay. Silver is 3. NAS is 0.45. All the same time frame. So knowing that each one of these pairs has a different value, a different move, and a different stop loss, it's a big deal. Okay, a really, really, really big deal. Gotcha. US
Okay.
is
Gotcha.
0.24. And this is all 10%. So this is like saying, I want to take a 10% trade. So if I take a 10% trade based off of a 2, and this is, granted, my stop losses are not 2 ATR away, which is why I don't love this one per se, but it's still not a bad way to be. It's a great way to get good at it. That's why I'd probably recommend this first, because you can do something like this. Ready? I can hit, ooh, Scott, I don't know if this is turned on, but we're about to see it together. So if I can hit sell, I can move my stop loss here, and it's going to tell me, I know it's going to, 1 second here. Low risk. I'm going to move all this a little bit lower. So if I move my stop loss super tight, I'm trying to sell. If my stop loss actually where I want it to be, it'll give me a 0.09. If I move my stop loss here, it'll give me a 0.05. If I want my stop loss so tight, it'll give me this. This is a little bit more duplicatable in my opinion. So I really recommend this more than anything, just to learn this concept. I think this one tool is so seriously going to help you. The same concept, I did have to go down a time frame. I'm gonna go back to the 1 hour. I'm gonna go to buy this time. It's giving me a 0.05 with the 2 ATR or whatever I have that one programmed with. That's a 2%, 3% risk. If I want my stop loss here on this buy, I've got a 0.30. But let's say I want to give it lots of room and I'm trying to buy it and I'm trying to do 3% risk. It allows me to manipulate this, and I like that a lot because it's real trading to me. I haven't been able to personally have a lot of success with exactly a 2 ATR stop loss. And not to say it's not possible. I'm sure that it is for some people, but for me and my trading style, I don't do super as like my accuracy over across the board is not as good with saying, hey, my stop loss is always 2 ATR. So this,
And as you drag that tag around, also notice that this is telling you how many pips and how many ATR that is on this time frame. So you get a feel for your ATR.
Mhm. Okay, I see what it. Okay.
but so let's go all the way back to your original question: is how do I figure out the stop loss on the indices, the stop lot size? Does this help you see that I will not be answering that question? Like,
Yeah, I get what you're saying. Yeah, it's too much calculation and stuff involved. Yeah,
and
depending
then,
on what you trading, what's your stop loss and your ADR.
and believe it or not, that's only part of the can of worms. There's more worms and more cans because different brokers and there's so many other variables that it's mind boggling. So for that reason, learning that, well, this one tool solves for most of it, like honest to God. So and it's not, again, nothing is 100%. I'm not claiming that, but this tool put on a different broker is going to help you figure out 80, 90, well, 90 some odd percent of everything about it. So it's going to help you know what all of that is. So even if you were on a different broker, that does calculate their pips a little bit differently. Because watch, if I go to Neo's, go figure. Got to put my foot in my mouth. Who would I be if I didn't do that? Hold on. OMG. There we go. $1 a pip. The pip value on this is different, right? So if I'm trying to sell this, look at that lot size in comparison. Like, it's crazy because it's different. It's a different pair. I put a tight stop loss on this. We've got 25 standards on a cryptocurrency because it's a different value. So, but that's where I would say is start with those resources. The compounding sheet, it's just a visual. It's a great way to start to reprogram your brain and your perception. The two websites I listed, Scott went ahead and reiterated and posted one of my FX book in the chat. It's the same thing, right? There's Stingy was an app, but I guess I believe it was Scott who said that's no longer free. I don't know for sure. It's been a hot minute, but if it's not free, I still think it's a great app to maybe consider. It's an app for your phone because it's super easy. But my FX book does the same thing on your phone. The app on your phone does the same thing. So any of those resources are free to you right now. This golden ticket is free to you in the group. Like, so you have access to this. It's a great place to start. But long-term skill set stuff, I would say this, honest to God, this is super important. Is this tool, this Swiss Army knife, and that's available on cooltradingtools.com. It is not free, but it's worth every single penny. If you're trying to gain your skill set, this is everything. This is everything. So it teaches you so much stuff that you can't get otherwise.
Also
Okay.
add that if you have a I think we get caught up with the trading and trying to compound the accounts quickly and all that, and that's all fine and dandy. But a lot of people really sleep on the even if you're just doing that 1 to 2% risk on an account over a long-term basis, it gives you a lot more opportunities to make mistakes. So especially like with the indice, or if you're trading any tool that's new and you're trying to sort of gauge the temperature on, it allows you to emotionally handle the trade a lot more. Because if you're losing 1% compared to 5%, you can just emotionally handle that better. And then just percentages and averages is you can lose a lot more trades without physically blowing your account. The other thing too is that if you do have, like, let's say the 2000 was your starting balance, one of the mistakes that I think I would have made in my trading career is one, investing in the tools, right? That's gonna help with your accuracy, help you balance that account more. So taking $100 or $200 of that and getting a few tools that will manage the trades for you, help you figure out the lot size better, is really good. Even if you didn't want to do that, you can do a 1 to 2%. Get consistency, because consistency is going to allow you to average up higher. As you get more consistent and more confident, naturally your lot size you're gonna want to level that up, right? So once you get that consistency, you can reinvest those profits into some of the other things, whether it's prop firms, whether it's an ATM, etc. So 1 to 2%, I would not sleep on that, and just allow yourself to grow with the process.
Hey, Jonathan, and for anybody else who wants to participate, I'm curious. I want to chime in on something on that. So thank you for everything you just said. Great points. But 1%. So I've got this screenshot I took this morning actually to send to the hedge fund. But 1% is a huge deal, guys. 1% is life changing. Seriously, 1% a day. Oh my gosh, it's life changing. You can literally change your life, and everybody who loves lives. Big deal. Especially automated. That's where I'm getting at on that part, and I'm super excited about all that to come later on. But Jonathan, the thing I would love to bounce around a little bit is, like we just saw on the compounding spreadsheet, the only deficit, and this I think does need to be brought to the table, is most people can't afford a 1% trade on US 30 with a 1 hour stop loss. Like, you'd have to be trading 10-20% of your account on US 30 to have a 1 hour stop loss. And that's something we don't talk about often enough, because and it's super relevant. That's not 1%, because even marginal loan. I mean, what is your thought process on that? Because if we tried to sell here, even all the way at this top, and with the stop loss here, this is a 1 hour time frame. So our first, go figure, we don't have another one. So here's one. So figure anywhere in this window. Let me zoom in, just so we can all game it. And we'll go back to the spreadsheet for conversation. And I'm open to anybody who's got some feedback here. So we're going to go middle ground. We're not going to go low. We're not going to go high. We're going to go middle ground. Figure your stop loss best case scenario is 7 to, plus we're adding an ATR cushion. And that ATR is 600-ish pips on this time frame. So we'll say 1,200 pips, right? This is 1,200 pips, you're not getting a, let's go, hold on US 30 with a 1,200 pip stop loss, even on a $2,000 account. Okay, you're getting a 0.01 at 10%. You guys see that? Like what? So what's your opinion on that? I agree that 1% people are sleeping on the 1% concept, but I think we also need to talk about the odds of you doing 1% and you're not trading a $50,000 account, a 20, 30, 50,000, literally that's how much I'm talking about is 20,000 and above. You're not gonna get to 1% if you're trying to manage on that time frame.
Valid point. The thing is, the thing that I'm worried or I'm sort of concerned, and I give a little pushback on with that for you, Jenny, is that in a lot of cases, people to trade something like US 30, you have to be emotionally at a specific position in your trading career to even handle an instrument or a tool like that. One, have you actually done that on demo? Do you know how it moves? Do you know how fast it moves? Do you know what time frame that you're getting in? Because the time frame is going to, like you just iterated, is going to depict what percentage that you can use. If you're doing a smaller account, and you really on an instrument like that, you're going to have to go to a smaller time frame. You're going to have to be on the 1 minute, 5 minute, because you're not going to be able to withhold the drawdown. And then the accuracy. All it takes is one US 30 or an opening candle or some news to go in the opposite direction, and then it knock you all the way out. And then two, what is your risk? What is your risk appetite? Is this account that you're trying to flip, or is this account that you're trying to grow for the long term? If it's a 2,000 account, and it's the only account that you have, then I would recommend that you go to another pair where you can size down a little bit until you work yourself up. Do S&P 500. Maybe you want to go back to a regular forex pair and trade that pair as you're growing it. As we stated earlier, Jenny, percentages are percentages. It doesn't matter. You're just doing a different instrument to do it. And obviously knowing the pair and how it moves, as I was talking about earlier, some instruments take a little bit longer to play out and reach its actual target than some other instruments may take. So all those take into account, and that's part of the trader and the journey, them growing into it. But that's why I do emphasize on that 1%, knowing where you are and where your accuracy, what your goals are. Because if it's your only account, there's no reason to blow the account. You don't have to do it. We all do it as traders. I've done it multiple times. I'll still blow accounts every now and then, but we don't have to do it. Just, see the bigger play, because 1% compounds over time. You can do a lot of things with that. And as you grow, then you can, take more extremes. You can take more risk, and you just sort of gain you gain that confidence to sort of branch out and try those different things. So that's the thing that I'm iterating, because I know, Jenny, not everybody may not be as open to tell you exactly where they are as a trader.
I think you just made a couple of good points. So yes, guys, seriously, if Jonathan just said something, I hope you guys literally took notes on that, because you can have, and I've said it too, and we've all talked about this a lot, but you can have your grow to bloat accounts. There's nothing wrong with that, but know that those are your grow to bloat accounts and you're going all in, you're okay with blowing it. But if this is your only account, and that's what he said, so please take note on that. If that's your only account, you're not going for 15% on that account. Okay. You're not doing it. So if it's your only account and this is more the long term, this is kind of, you're looking for your daily bill pay account, you're looking for your daily trade, your monthly growth, you're trying to beat the 10% that Wall Street is averaging in a year. They're averaging 10% in a year, not a trade, a year. Then you're not trying to do 15%, you're at 1%. And there's nothing wrong with that, but there's nothing wrong with either. I'm a big fan of both, but just know what you're doing, because it's a big deal. Huge deal. Real quick, in the chat, Brika asked, guys, there is a broker in my link tree. It's LQD. It is not my all-time favorite. I like it enough to stick with them. A lot of play in terms of some of their holidays and all the other stuff. I love you. I miss you. Sorry, my daughter just got home. I'm gonna give her a hug. I haven't seen her in a couple days. To the moon, I do. Oh, it's such a good hug. You love me so much. I do. I love you. I'll be off in a few, okay? She came in the office with a big smile on her face. I couldn't possibly turn her away. I love that girl. So, anyways.
She didn't have Starbucks for you today?
No Starbucks. No, I'm okay on that. But yeah. I got the cup this morning. Remember, I got this special cup. I even sent her a picture and said thank you.
True.
So guys, huge deal. Brika, I mentioned the LQD, great broker if you are trying to practice US 30. So kind of to compile some of the discussion that we all just had. If you don't have enough, go to LQD and just practice the instrument, not necessarily to go make your bajillions, but to practice the instrument, because they allow you to trade the mini or the micro or whatever lot size that, you know, is smaller. They allow that. So that's a good idea too. But Jonathan, what we were just talking about, see, look, 25,000. This is Hugo's way. It's 25,000 to get to a 0.01 with a 2,500 pip stop loss to get 1%. And pretty close. I mean, I'm not saying this is everything, but it's close.
Yeah, see, that's a lot. That's a lot of capital to have just to get 1%.
So you guys all see this. Vincent, the person where this conversation started, $2,000. Obviously, that's a no-go. 1,200 pip stop loss, which is what we just looked at. Okay, still a no-go at 1%. You can do it at 10% risk, but that is barely, just barely. And then you have a risk of lowering because your leverage is not the same, because your leverage is actually 200 to 1 on an index. So that means your max stop loss to stay above 300. The odds are
I'm
this.
glad you told me.
See?
I'm so glad you said so, because I had entered in on German 30 on a 0.02 lot size, and on UK on a 0.04. And so I don't know if I should maybe just put it at my entry and maybe just hold it out.
Well, protect so as soon as you get to profit, protect. I don't know what your leverage is. What is your margin availability right now? Because this
It's
whole
569.
this whole spreadsheet is programmed to stay above a certain minimum margin, guys. That's what it is programmed to be above. So 500 is technically, we know we can push it, and I know people way better than me who do push it way further than me. But we wanted to find a way to say high risk, but within like sanity, you know, high risk, but within like stable people head mindset, not total gambling. So that's where we got this 500. Kat and I talked about this at length, and that's what we decided was 500. So we talked about going to 300, and that's just 300 is a sneeze away from blowing a count. It's not impossible, but it is a sneeze. And the 1,000 is too high if you're trying to trade any indices. So high risk means you're keeping your margin availability above 500%, which until you learn this stuff, Vincent, this is a little bit easier. So I probably learned this long before I perfected this. I perfected this before I ever got to lot sizes.
And what 500% means in terms of your equity is that you're using 20% of your equity for margin. If you increase above 20% of equity, you've gone above your 500%, or below your 500%, I should say. It's weird that they have inverse relationships.
Okay, yeah, I understand. I usually that's kind of the same thing I kind of was using with the forex pairs too. It's just like, because I had learned it somewhere, I think online studying or something. But yeah, I usually try to stay like above 500 overall on whatever trades I'm in.
That's a good way to be, honestly. So if you're practicing that, that's a good way to be. So before I knew all the stuff I know now, what I did, and I'm not advocating for this at all, was when I would take 3 to 5 trades at a time. When certain amounts were in profit or locked, I would be allowed to take another trade. But if they were not either up and protected, right, or had scaled out, kind of in my janky way of scaling out all those years ago, if that had not happened, I wasn't allowed to take another entry. And then of course this right here. So depending on where I was at, like if I was close to 500, I was not allowed to take another entry, period. And at all, even if I had 5 positions that were all locked in profit and I wanted to now go take a different pair, I wasn't allowed to if I was too close to this. That's how I held myself accountable before I knew this stuff, because it was a lot to learn, and I wasn't there yet to learn. But that's your very long answer for all that stuff. So please play with the tools you've got access to. Start there. ATM. Oh, the one thing we did not mention is this. So last thing, remember we said you've got a couple free websites. You've got a free spreadsheet. You've got your margin to watch. You've got the golden ticket, which is going to give you a really good baseline. We've already talked about all that. My next thing we talked about was Swiss Army knife. It is an amazing, incredible tool. It does way more than just lot size. So I think it's super, super advantageous thing to do. But there's something we didn't mention. And I would be remiss if I did not bring it up. How do I make it stop? Hold on. X. Gotcha. Is this. So watch. I'm going to turn on my auto trading. Okay. If I hover over this, watch what happens. This is part of the ATM. So this is a little bit more advanced management, but it's going to be a little bit laggy. Part of it's the tool and the licensing. Part of it is because I'm on a VPS and I'm on a Zoom. So it's not as bad in real life, but watch what happens. If I sell at whatever percentage I have programmed into this, so if I go to my risk, 7%, my stop loss is structure, right? With one ATR pad. So basically this is managing the way very comparably to what you just said. You want to use structure. Mine's a little bit different, but same concept, right? Watch what happens. Back to general. On US 30, if I hover over it and I would have a 0.28 buy, and this automatically types it in. So I just buy, it's a button. If I want to take half of my 7%, I want to take 3.5% risk, I can hover over it and I've got a 14. If I want to take my gold, okay, let's say I want to buy here, wait for it to load, it's going to take a second, 2.28 on this account size based off of 7% risk. You see that? So what that's going to do is my risk is set to 7. My stop loss is 4 fractals back plus a 1 ATR cushion. So I'm going to minimize that, and I'll show you what that would look like if I entered right here. I'm going to go to visualize, because you're pretty new, huh? Oh, not going to let me go to visualize. Hold on. There we go. So if I'm entering right here, I'm going to hold. I'm going to hit exit. That's going to make my stop loss way down here to give you an idea. So if I enter right here, my stop loss is here. I'm taking profit. My exit manager is going to kick in. All this super genius level, I don't have to think about it. Stuff is kicking in. I'm good. My only job is to find some good trades and go on with my life. This is going to do the rest. And this is going to tell me the lot size I'm going to use. So if I'm doing the full 7%, I'm going to just hit buy. If I'm saying, hey, I've got one entry, I want this slightly tighter entry, and I'm going to do a bigger lot size or a smaller lot size, whatever the case is, it's going to give me the lot size. So this is a super advanced, it's genius. Look, it takes out the biggest problems people are facing. The couple of things we mentioned today solves all of them. Like the Swiss Army knife and the ATM, this button solves most of it. There's still some U factor that you're going to have to work through, but to give you an idea. And watch, same concept. If I sell, remember, I'm going to hit this out. This is going to choose, I already have my management where I want it programmed in. So I'll show you what it looks like. If I were to sell here, notice how different this is because my stop loss is a bit further because of how structure is sitting. And I hold it down. Well, give me a second. Well, impatient. It's a smaller lot size because my structure is different. You see this? Because my management is different. There you go.
Okay, you said I can go get and this is the Swiss Army knife?
Now this right here, this tool is part of the ATO. This is the buy sell button. It's a companion product to the ATM. This Swiss Army knife doesn't do that stuff, although it does actually have a buy sell button also into it. It's kind of comparable. So this is the information based tool. It's just an info panel. It does all kinds of cool stuff. If I press I, tells you all the stuff you didn't know. And it does a lot of other cool things too, to give you an idea. But this is think of this as info, okay? And it does have some cool tools, not included. But it is a cool tool, and it does have a buy sell button included in it. I'm gonna hit H again, and then this is the ATM. This is the buy sell button, a companion product to the actual ATM itself. So super, those are great things to do. And look, it'll solve your problem. And at first you're gonna be like, whoa, I didn't know. I didn't know what I didn't know. And it'll also show you that on US 30, check this out. And this is on this account. This is a $30,000 account, guys. 32,000. Just to show you, if I buy, I'm still only at a 0.3. So it's about, it equals to be about a 0.01 for every 1,000. But that's with the 1 ATR stop loss pretty much, just to give you guys an idea. If I sell, watch what's about to happen. I'm a little bit scared. You got a 0.04. because where's my stop loss if I'm selling here? If I'm trying to use structure, yeah, it's far. But if I buy, let me minimize this so we can just see it together. If I buy here, where's my stop loss? It's pretty close. It's pretty much at the low with 1 tier cushion. So it's pretty close overall. So that's why my lot size is so different. To give you guys an idea. But that's going to help you. So if you have any background in trading, you're already in a good path. Like you're already where you need to be, but it's just a matter of figuring out these little nuances that they're really big important. So
They
And
got a lot of
keep,
videos. Oh, sorry.
yeah, keep in mind that there is also another product that integrates the buy sell buttons and the ATM into one product called Little Buddy. And it doesn't do everything that the ATM does, but it will set your stop loss. It will calculate your lot sizes.
Okay.
I was going to add that they have videos for all of those items. A lot of videos that Scott has a lot of information compiled in. So any items that you may be on the fence on or just trying to gauge, if that will be advantageous to you, just give a couple of looks to those videos, and that should hopefully answer some of your questions on whether it fits your parameters for your needs.
Okay, thank you, man.
And there are free trials for everything. You get a week free trial so you can play with it.
do one at a time though. So just don't do all of it at the same time because then you're not going to be able to honor and learn it as well. So if you want my unsolicited advice, it would be choose one this week, one another week, one another week.
Yeah, I think that's good advice.
And here, my job is to stay true to me, right? The most authentic version. I'm telling you, you need the ATM eventually. So that's personally where I'm at. The Little Buddy, I'm sure, is great for people who are on a different path. But from what I've heard you say, you seem to know enough and you seem to be on a path of, I'm looking to get the best, the quickest. And honestly, the ATM is going to be it. So Little Buddy is a good option. It's a smaller version, but I'm going to continue to say ATM all the way. I'll create.
He said, and how do I get the ATM again?
It's on that same website. So it's on the same website.
FullTradingTools.com.
Okay, I'll trade too.
It's in there. So, all right, well, guys, that's enough. We've got our couple of trades. A little bit on the slower side today. That's real trading. If I go all the way down to the 1 minute time frame on US 30, we're still doing nothing. So I'm glad we did. We could have caught this little baby dip here. That would have been nice, but we were yapping. Came down, retested the 50. Still not much as of right now. So you guys know, you guys have been around long enough to know this is a 1 minute time frame. You've got plenty of room between here and the next higher time frame 50, and the risk to reward on this would be good when and if it sets up. It's just not setting up right now. So could we have again scalped the actual trend direction? We could have. Not a bad way to be. We could have done that twice as well. But I was looking for the more assured play with the better management, and it just hasn't set up yet. So you, by all means, track this trade. You have what it takes to do so. UK is in profit and doing well. EURUSD is in profit. Just it popped up pretty good, but now it's coming back down to retest. And gold is kind of still sitting pretty still. So overall, great day. I'm gonna remove this stuff so it's not.
I ended up catching that German 30 too on the. I've been missing it. I missed it last week. I was supposed to catch that drop last week, but I ended up catching it this week.
Hold on, let's see, German 30. Nice.
Yeah.
Look at that, baby. Hold on. Beautiful right here. So we marked this. We know we've already got this marked up. I can't count any. I could count the pips. Actually, it's still valid. This is a great trade for those of y'all who have the room in your account. Remember, this is an expensive instrument. The lot size is going to be expensive. It's a lot. What lot size are you on for German 30?
0.02.
That's what. Yeah, that's right. You said that. So to give you an idea, at 3% risk on a $30,000 account, I've got a 0.04. Just so you know, it's not bad, and you're watching your margin percentage, right? So you are in a good position, but just I'm not against high risk. I'm all high risk, but you got to know that you're being high risk. I mean, that's my only request is know that you're doing it. So you probably have like a 20% trade. I don't know what your stop loss is, but maybe even more. Like I don't know. I'd have to see it.
Which is great on the reward side. It's just that if you take the loss, it's kind of painful.
Yeah, I just pretty much um took it where it was at because when it dropped down before and then I looked at yesterday's low and it was rejected off of yesterday's low and I seen it broke down, came up, retested, spiked against price and almost hit the 50 EMA. So
Nice. Well, we talked about this when we looked at the trade reviews. We said, hey, look, we came right back into range. Didn't really analyze it. This is still a good trade, you guys. Great trade. Because even now, like, let's just talk for a second. I don't know. I'm feeling charty. I honestly was semi tempted to say, wait, I'm not doing a call today because I wasn't sure what time I was going to get in. All the flights were delayed, multiple airports. It was craziness, craziness. But check this out. It's still not a bad risk to reward. You've got about a 3-to-1 into this level, right? With your stop loss pretty far away, and you don't even need it as far. You can have it a little bit closer. So figure 3.5 to 1. This is not a bad trade for those of you guys who are looking for one more, but have room. If you're already at 500, 600, 700% margin availability, don't take another trade. This is a marathon. This is not a sprint. You go get 2 or 3 trades 2 or 3 times a week. You don't need more. The reason I think people lose one more TED Talk for the day is they go to a class like this. They're very quick to blame, everything and everyone, a signal service, a trade, a bot, everything in between. And whether or not you won or lost is insignificant, because if you took 2 or 3 winning trades, mismanage, you take 2 or 3 winning trades or losses from you, me, or the next guy, it doesn't matter, the neighbor, I don't care where they came from, but you're in, you're out, you're in, you're out, you're in, you're out. Come Friday, you're like, oh, trading doesn't work. Come the end of the month, you're like, oh, I put in 300 and nothing happened. Like, oh, the screenshot I took this morning, I sent it to the hedge fund that we're doing. My only goal with the dragonfly was to show that this is not perfect. None of this is perfect. I'm not claiming that, but you can start with $1,000. Okay. So I wanted to do that on a couple different methods. I wanted to do that to help honor Scott. About once a month, we'll mention stuff like cooltradingtools.com. But I wanted to prove, hey, look, weekend warrior style, you can make a ton of money and then go live on that money. I want to do the same thing with Dragonfly, which is put in this much and then withdraw, right? So I put in $1,000. It was actually a little bit more. And then on each one of those accounts, I withdrew 3,000, for example. And when I got to 10,000, okay? So now it's all obviously risk-free. I've made 200% growth. Well, 200% return on my investment cash in hand, 1,000% return on my investment that's still invested, right? All hands-free. Like, there's so many possibilities, but people are over trading. They're over trading. They're jumping in, they're jumping out. They're making too many mistakes. They're not looking at the big picture, the long term. And then they're so quick to adjust EAs, to blame ATMs, to freak out on signals, their own or somebody else's. And it's a mess. And I'm not even a big fan of signal services, guys, but that's my TED Talk for the morning. It's all very possible. It's within your fingertips. So it's definitely within your fingertips. That's all I got. But anybody have any? Well, I haven't actually asked this once. The conversation has been amazing. I love every single one of you human beings. Thank you. I'm really glad I came today. So I'm going to ask one time. Does anybody have any other questions that they need to go over or want help with that we can go over on Thursday? Anything at all. There's no question too dumb or too silly or too out of this world. Let me help you get from where you're at to where you want to be. Help me help you. Like, what is that, Jerry Maguire? Help me. You guys know that part?
Yeah, you got it right. That's Jerry.
Help me help you. Yeah. So, all right. Well, no, Reagan, come on out. What do you got?
Just I was just trying to wrap my head around when you made the call that GBP USD has further moved to the upside, which it did after it made the 4-hour break.
So you're trying to see what I saw, or what is your question here? Talk to me.
Yeah, my question is, after it made the 4-hour break on the 4-hour candle, can you just pull it?
Yeah, I'm here.
Okay, so after it made this break here,
Okay.
on the 80 and it reached the ADR, you don't necessarily sell at the top of the ADR. but I know that previously, and it's been trending down. So I tried to get in with tight stops. So I would probably get in somewhere around a little above. It depends on when this candle closes, though.
Yes. So
So would you say that this is a good area to sell on the long term, or does it have more room to move to the up before it drops?
this is a great discussion point. So 4 hour time frame, there's still an hour and 20 minutes left on this candle, right?
Yeah.
And that's the problem with this industry. Like there's so many things that we can go over that it's so easy to get lost in the message gets lost, right? Like a game of telephone. Like we talked about that last week. So is there a trend line technically right here that we're literally potentially bouncing off of? Yes.
Yeah, that's what I see.
There you go. The bigger time frame, we're technically moving down. Yes, right? We see that. So we've got two pieces of evidence. On the daily, we are moving up. On the daily, we've made a high, right? We have got a double bottom, and we definitely have some more room to the upside. So as we go pop around, it's very convoluted. It's a whole bunch of tally marks, if you will. Now, it would be better to have sentences, but we can just do tally marks for conversation purposes. Daily time frame says we're buying. We've got a double bottom on the daily. We've respected the 50, came back, played around a little bit. We've got more room to buy. We've got a W on the daily, very powerful, and we've got that. It's not just any W, you guys. It's a W at an area of interest. So this W is literally at this void right here. So you guys know where I'm targeting. You guys know this is my target. And where did that W come into? Perfect. So daily time frame actually says, no, we're buying. We're going to finish this W at least, which gives us a heck of a lot of pips. Don't quote me, but figure 195-ish pips. We got room to buy daily time frame. And daily time frame says we're buying. Weekly time frame, obviously, we already know without looking. Well, down retracement, potentially sell. A little in between, but we've even got a janky head and shoulders, which would say buy. So bye-bye. 4 hour says we're selling. Impulse, correction, impulse. If we break this high, that sell is done. So do we technically have one more wave to the downside? Yes. So again, tally mark style, trend line potential bounce. We have not broken through it and retested. So I am just as guilty as every other human being at stuff like this, where I want to take I don't love this, but we're just going to get a little bit close, get a little bit snugly. Hold on. So we've got in here, right? It's really easy to say we're going to break a trend line and then go. But no, we want to break the trend line and retest it before we say anything is actually happening here, right? So this is a trend line. There's also another trend line that kind of comes up and gives us a little bit more room from here to here to here. But that one's not proven yet because there's not enough touches. So as we speak, we're breaking above. But before we would even consider the rejection, we have a wick saying we might be rejecting on this zone. But we have no reason to sell as of right now. We're at an area of interest, but not quite. Because if I were to go mark this up and look for my levels, like if I was not on with you guys, and this is just me, I'm going to zoom in. I'm going to say, where are my levels? Right now we're moving up, so I'm always marking up to the upside first, right? Magenta lines for discussion. So here's my next level. So before I even do anything, here's my next level. Beyond that, where's my next level beyond here? Don't love this as much, but let me go to the bodies. I can live with that body all the way across. I've got two nice little zones, an area of interest. We're still pushing up. So if price is here, this is a 4 hour time frame. I want a little bit more of my levels because I don't like it that far. We've already peaked up. We've already come and rejected off of this area. So this area that I would be targeting, we just rejected off of that right now. So we just already bounced. So this little head and shoulders is kind of paid for. If we measure, the head and shoulders is paid for. We can't count that as pieces of evidence for the buy. So 61 pips. We've already paid for the head and shoulders, so that's a big X for proof of the buy. But we've also broken above this trend line. If we retest, we're going to keep going up. If we break below and retest, we're going to sell down. But I don't necessarily see what you're seeing as a strong point to look for a sell. And one of my biggest reasons why is taking out all the noise. Ready? What direction is the most recent engulfing or momentum candles? Reagan,
Oh,
is it bullish or bearish?
bullish.
Bullish. So we've got one momentum candle, also an engulfing candle, also we've got another momentum candle, also an engulfing candle. We've got a lot of reason to be looking for this to buy. So impulse correction, impulse, we're retesting 50%. There's a heck of a lot of people looking to buy this right now, which also follows suit to this. Now, granted, we've already hit the ADR high and low for the day, so we might be done for today. And we did just come kiss this first level. So I'd be more looking for this buy personally, not the sell.
Okay.
There's divergence. So see this area. I went to the daily. I'm guessing that's pretty decent divergence. Let's go find out. Maybe. So you see this right here. This is lower than this, and this is lower than this. That's divergence. A lot of evidence saying that we're going to buy. But that's where I'm at on it.
Okay. All right. Thanks for that, Jen.
I'm sorry. I don't know if that helped or answered your question, but
Yeah, it did, because you the only thing that was making me hesitant was the resistance area, like when it hit on the daily time frame. But then I'm like, we already bounced around on the ADR low, came out to retest ADR high. So I was just trying to wrap my head around, like, why did she call? Like earlier you said, you think it's gonna go up, and it did. I think in the beginning of the class, and then I think I was on the road when you said that. So I was just trying to wrap my head around, why did you make that call?
well, I was also on the trading view. So when I'm not great at this, I'm still a work in progress like everybody else, but on trading view, I'm really trying to do an open-minded, where are we going if we buy and where are we going if we sell kind of analysis. Now, granted, my bias is strong because I'm a strong-willed girl, but it's also really accurate. So it's hard to sometimes overcome, just to be transparent. But that's my goal when I'm on TradingView, is to show you levels on both sides and to say, hey, we break above, we kiss this level and we reject, you know where we're going. Hey, we break above that level and retest it, you know where we're going. Hey, we break low, you know where we're going. Let's use this analysis. But sometimes the bias is a little bit more. So my bias, yes, on this is definitely buy. And yeah, it was right. You got, if we take again, if we just split this screen in half and we just write some sentences and say, okay, here's the reasons I'd be looking for a buy, here's the reasons I'd be looking for a sell. And some of them are weighted heavier, right? Some of them, divergence on the daily is weighted a lot heavier than, you know, a breakout on the 5 minute, right?
Yeah.
It's all relative. But for me, we're on line chart now. Let's go to candle. We first off got divergence on multiple higher time frames. Second off, we came and we kissed this zone, which is exactly where we were wanting to go. Bigger time frame, we've got some trend to the upside. We have failed to break this level for quite a while. Now, 4-hour time frame also says we've got an M formation. So 4-hour time frame says we could definitely just as easily continue to sell down and pay for this, which is going to put our target way in this window. That's going to be way down here. So I'm not saying that this isn't on the table. I'm saying for today, I would be looking for a bit more of a buy up. And if I get the evidence, so like, let's say we do get the rejection off of this trend line, great, I'm here for that. I will sell it down. But for today, where we were at when we were analyzing it, still told me we've got some room to the top side. So we've definitely got some room to come back into these zones and then get our analysis from there. So we have not broken this area yet, not even come close. We're failing to make lower lows. Here's our low, and these are not lower than here. And that's a 4-hour time frame. Let's see. That's our ADR low. We've already hit both of those in the range today. So can we get a retracement back into the center of this? Yeah. I wouldn't mind taking a scalp, kind of like I would take a scalp on US 30, 70 pips down, 75-ish pips down. Figure this whole range is 130 pips, so 75 pips down. If and when it sets up, but for right now, it's not set up to take the counter scalp. So, but you were trying to take the early bounce off the trend line, huh?
Yeah.
So no judgment, I promise. The last thing maybe I'll say is I too want to be early, and it's easy to go get early trigger entries on bigger time frame analysis. It's easier for me to do it that way. but trying to anticipate the rejection that has not happened is trying to control the market. So maybe something to consider is, okay, so you clearly have a knack and an eye for seeing trend lines. That's awesome. That's glorious. That's grand. But then how can you better use them? So don't count it until it proves itself. Like you don't do it in anticipation too. So that means you need to see, if you see this doji, for example, this next candle has to make a lower low before you count this as a good entry. Not, hey, I'm going to try to get in on the 1 minute here, and then of course you get knocked out on that sell because you didn't have a reason to. If you're
Yeah.
going to take rejections, you got to take them based off of reasons. So that's it. That's all I got.
All right, thanks, Jen.
You are welcome. All right, guys. Well, thank you everyone who came out, participated, asked questions, comments, all the stuff in between. I hope you guys all have an amazing Tuesday. I'm going to get off and go love on my girl for a minute. And then I do have a simplicity call this evening. So I believe all those trades played out really well, which is grand considering the last week was awful. I think it was the worst time we had ever had. But again, I'm not shy about it or worried about it because it's real trading. So I'm excited to be on this journey with you. I hope you guys all have a beautiful day. And I will talk to you guys on Thursday.